Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Tuesday, December 9th, and I'm happy to be back on the show. Thank you, everybody, for being here. First of all, I am sorry I missed yesterday for the Market Open and the close. Also missed Sunday for the future show. I got sick, but not like sick to the point where I had to go to the hospital and like get antibiotics or there's like some big infection or anything. I just got a cold. And it was one of those colds where your throat is hurting, you're coughing, you're sneezing. You're going to hear me sniffle a lot throughout the stream. I got a towel here with me the whole time because it's still not the best. I got like 3 hours of sleep last night. Slept at 1 o'clock, woke up at 4. I've been up since 4:30. Like I just could not sleep last night. But it's not like I need to go to the hospital or anything like that. So it's one of those things where I just forget talking yesterday. I couldn't even like look at a screen because just the light was affecting my eyes. It was just, it was a mess yesterday. And it kind of, I felt it Saturday night. I think what happened on Saturday, I was walking outside in the cold and, I don't know if this is technically how it happens, but I don't think I was really wearing a scarf. So my neck is kind of sensitive to this stuff. And then boom, I ended up just getting a cold. And so that's kind of how it played out. I felt it Saturday night. Sunday I woke up. I was like, this doesn't feel the best. I was like, all right, let me skip the future show. Monday morning I'll be okay. Then Monday morning I woke up. I was like, there's no way. There's no way this is happening. So we are back. I don't think it's anything too serious. If it was serious, I wouldn't be able to be streaming live. I mean, the most my fever was 97.5. So it's like, I never even got above a 90. I didn't even get close to a 99 on the fever scale. So I think I should be okay, and I'm happy to be back. But nonetheless, we did have a stream scheduled for last night with a rapper, 24K Golden. Shout out to him and shout out to anyone who watched the stream last night. I really didn't want to cancel that stream. I was supposed to go to his concert on Saturday. Sunday night. I missed the concert because of being sick. And then so I know a lot of you guys are like, you didn't seem too sick last night. It's because I drugged up on NyQuil and Tylenol to make sure I could do that stream because there's not too many opportunities. That stream was scheduled for about a month. And I really didn't want to cancel that because I was good enough to do that stream by the end of the day after sleeping for 10 hours. And so that's why we were able to do it. But yeah, no fever, nothing too crazy. If it was anything that bad, I would have told you guys, but it was enough to the point where even trying to talk in front of the screen for 5 hours wouldn't have made sense. But we are back. I'm happy to be here. Thank you, everybody, for being here. We got a lot to talk about. Tons of stuff that happened over the past couple of days, definitely over the past 24 hours. This Netflix story is absolutely crazy. The amount of twists and turns that it has taken was wild. So we're going to talk about what's going on with Netflix and Paramount. You've got Nvidia, updates on Nvidia and China, some stuff that's bullish, but not necessarily bullish enough to get the stock really moving, although the stock was moving yesterday. So we'll talk about that and we'll go deeper into it. We got jobs data that we'll talk about, private ADP payrolls, Microsoft making a $17 billion investment into India for AI infrastructure as of this morning. So we'll be talking about that. A bunch of different capital raises. So CoreWeave 2.25 dilution in convertible notes. They have extended that offer from $2 billion to 2.25. That stock was down yesterday. It's recovering a little bit in the pre-markets. And overall, markets are red. Now, the biggest reason they're red, I think, and probably the reason they're going to stay red, I mean, maybe we recover later in the day. S&P 500 right here, I mean, it's basically flat. It was worse about an hour ago. Right now, it's relatively okay. Is we have the Fed meeting tomorrow. So the Fed meeting is a big, big deal. FOMC, that I definitely wanted to recover before the FOMC meeting because that is going to be a massive, massive meeting. We are going to see if we finally get this rate cut that we've all been waiting for, if it's priced in, if it's not priced in, how the market reacts to it, how the trajectory for the rest of December, rest of 2025 ends up going once we do get that rate cut, which right now the probabilities are at 89%, or 87.2%. So there's still a 12.8% chance we don't get it. I think it's unlikely, but there is a chance. And so we'll talk about the implications of that as well. Also, we have big earnings this week. I mean, today after the bell, we'll have Technical Tuesday as always, but we have GameStop, which is not that big of a deal. Tomorrow, you have Oracle and Adobe. And then on Thursday, you have Broadcom, Costco, and Lululemon. So Wednesday, Thursday, we actually have a decent chunk of earnings to go through. And we'll be looking at what those earnings look like and doing a little bit of a preview of those earnings as we get into the rest of the week. That's what we got. I did not drink Saratoga water. No, I did not. Honestly, over the past couple of days, I've been drinking regular water. I've been trying to just drink like tea, and honestly, that's it. I haven't been eating anything too crazy. Tylenol, NyQuil. It's like really, I haven't been eating much over the past couple of days. Just been trying to get better. A lot of people texted me that, if you're in the Northeast, the cold, it hits you like a brick. It really does come out of nowhere. And like now it's cold in New Jersey. Like before it wasn't cold. Now it's actually cold. So, yeah, I was not out partying all weekend like some people thought. A lot of you guys thought I was just out partying, and no, dude, it's not partying. I was like, I legit just ended up getting, I guess, a cold. I don't even know if sick is the right word, but it was enough to the point where it'd be hard to stream. And you can kind of tell a little bit of my voice right now, but I think we'll be okay. It's -5 degrees in Maine. In Jersey, it's 18 degrees. We haven't had negative degrees in Jersey Fahrenheit in a long time. Like, I think maybe 5-6 years ago. Usually it ends up stopping at around 10-15 degrees, but we'll see how cold this ends up getting. All right, let's get into it. Thank you, everybody, for being here. Also, we're going to have another stream on Friday introducing my new manager as well. So I told you guys I've been working with someone new. She's going to be on the stream on Friday at, call it 7:30 p.m. Eastern. And so I think that will be an exciting stream. We'll have a bunch of fun announcements for the future of this channel. And yeah, I'm excited for you guys to meet her. And I think it'll be fun to kind of get introduced. She's going to be a big part of this community. We met on Saturday as well. Told you guys I was meeting her, and yeah, pretty much signed our contract, and she's going to be a big part of this community over the coming years. And quite frankly, she's just a hustler. She's just a massive hustler. So I think you guys are going to enjoy her, and it'll be really fun to introduce her to the stream, to the community, and get things going on a lot of things we've got to do next year. Meetups, new events, new interviews, new podcasts, a lot of different stuff. So we'll be doing that on Friday. All right, so let's get into it. I think let's start off with this Netflix news. Last night, big deal coming out of, actually, let's go to NVIDIA before we do Netflix. So Trump basically said, okay, I'll bite, and NVIDIA is allowed to sell into China. So H200s, which are the 2023 version of NVIDIA's best chip, is now approved for customers in China. 25% of each of those chips is going to be sold to, or is going to have a revenue share with the government, which originally was 15%. So Donnie T stepped it up to 25%. He says NVIDIA's US customers are already moving soon with their incredible highly advanced Blackwell chips, and soon Rubin, neither of which are part of the deal. And my administration will always put America first. Now, this was really important for NVIDIA. We touched 190 for the first time since earnings, which was important to see because finally we got NVIDIA back into the groove of things. And, I think NVIDIA should be well over at least 200 right now, or at least close to 200, just given the earnings that we saw. The reason NVIDIA is not back at 190 is because the Chinese came out this morning and they said, hey, well, we want the chips, but we don't really want the chips. So according to two people with knowledge of the matter, as per the Financial Times, regulators in Beijing have been discussing ways to permit limited access to the H200, NVIDIA's second best generation artificial intelligence chip. Essentially, regulators are weighing an approval regime where buyers might justify why local chips are not enough, so why the Huawei chips are not as good as the H200s. And then and only then would you be able to get access to the H200s. Obviously, China, and this is not a secret, they've said this a while ago, they want Blackwell. And they've been wanting Blackwell for a long time. The United States has not really budged on that. Secretary of State Marco Rubio is being really stringent on the idea of Blackwell actually being sold to other countries. So, I mean, look, I don't think this is going to move the needle massively for NVIDIA in the context of some amazing increase of revenue because they're selling to China. However, what it will do is get some revenue back for NVIDIA, which to me means this is an upside. I mean, we already know that NVIDIA is basically guiding for $500 billion of revenue, which they're likely going to beat over the next 5 quarters without China and realistically without the Middle East. I mean, they're just factoring in the Middle East into all these projections. NVIDIA, right, they're up about 0.4%. If they get any bit from China, even if it's a couple billion on revenue numbers that are not going to be easy to beat next year, at least from my perspective, it's going to be a beat. It might not be a beat and raise to the magnitude that we've seen over the past couple of quarters. I mean, last quarter they beat by $4 billion. Maybe they beat by $1 billion. If they can get that extra $2 billion every quarter, maybe $8 billion for the year, that helps them continue to beat. So that I think is a net positive for Nvidia, but the street's going to have to really see if China is going to be willing to sell as much as they want to sell or buy as much as they want to buy from Nvidia. So I think it's net positive. It's good for AMD as well, good for Intel. Trump said this would apply to both of those companies as well. AMD and Intel up a little bit in the pre-markets, but we're going to need to see how much this actually affects Nvidia's broader earnings. Trump will be delivering a speech around the economy at 6 p.m. tonight in Pennsylvania. So you're going to see a speech. Probably is going to be talking about affordability, going to be talking about the state of the economy, going to be talking about everything that's going on in the world of probably, the U.S. stock market, tariffs. I mean, he's been going off on tariffs. We've been talking about these ideas that the Supreme Court's going to reverse the tariffs. Trump has been tweeting over the past 48 hours that basically it's very likely the Supreme Court is going to reverse the Trump tariffs. And he's, arguing to the American people how bad this would be for national security, even though the administration has some plans to be able to navigate the tariff situation, even if they lose the Supreme Court case. But he's kind of getting the American people ready, or at least his base ready, to understand that the tariffs are a victory, even if we don't have access to them because of the Supreme Court. And you're going to see a lot more of those arguments over the coming weeks from the administration. Jose says they really need the chips, all cap from them. Yeah, the thing about the Chinese as well is that, even what we've seen from Huawei, we haven't seen a level of chip architecture from the Chinese companies that is still as good as even NVIDIA's worst chips. I mean, some of them compare. Even some of them compared to what NVIDIA has been creating, but not at a substantial level. Even DeepSeek, people forget DeepSeek, which created that whole dip opportunity on NVIDIA when it fell 50%, was trained on 50,000 H100s. It wasn't trained on Huawei chips. So I do think the Chinese are kind of bluffing right here. They would love to have access to these chips, but they don't want to seem like, okay, fine, you give us your B chip. And so everyone's obviously going to know that Chinese models are going to potentially be less powerful than US models if US companies have access to Blackwell and Rubin. China would probably rather not even want those chips, but I think they still want the chips. Perceptually, they don't want the chips, but realistically, they want the chips. So we're going to see how the market thinks of it. Overall, I think it's net bullish that NVIDIA is going to be getting these sales to China. NVIDIA right there, 186.48 right here in the pre-market. Yeah, a little bit of 5D chess being played from the Chinese. So that's what you got on NVIDIA. We'll see when the market opens how that plays out, but that's kind of one of the main updates, and we're going to see if we can get back to that 190 range. Warner Brothers, let's talk about that, up 1.32% in the pre-markets. This story has just been absolutely crazy. I'm sure if you follow finance media in general, or even technology media, everyone is talking about this. And, quite frankly, I think everyone's talking about this simply because it's going to affect the media landscape at a broad scale. First, let's just listen to what the CEO of Paramount, David Ellison, who is Larry Ellison's son, said yesterday about Warner Brothers. They started initiating a hostile bid for the company, just like you have insiders and active investors engage in hostile takeovers. You can also have companies engage in hostile bids, which is, hey, if you've already agreed to sell your company, we are going to outbid you, go direct to the shareholders, and let them decide if our offer is better than your offer. And the company, which has a fiduciary responsibility to evaluate every offer, has to take it seriously if the offer is net better.
Our offer is $30 a share, all cash, $41 billion in equity that's backstopped by the Ellison family and Redbird, $54 billion in debt with commitments from Citi, Bank of America, and Apollo. We have faster regulatory certainty to close, and our deal is pro-consumer, it's pro-creative talent, it's pro-competition, and we believe that when you actually, to further contextualize, our $30 in cash, $30 a share is basically $17.6 billion in cash more than the $23 in share that they signed up.
Right. Well, you're not obviously paying. You're paying for Global Networks. Their deal doesn't involve paying for Global Networks, which are traded as its public company, which, by the way, also figures very prominently here in trying to determine what the overall value of the respective deals are. Because there are $27.75, including obviously the stock portion of their deal, but it also includes, well, what's Global Networks? Is it a $2 stock? Is it a $4 stock? What do you see? Because that can go a long way in terms of at least determining why the board may have said, no, we think Netflix is superior.
So respectfully, we think that basically that's valued at $1 a share. I think if you
Why
look,
$1?
so if you look at Versant and where the median of all of this is, it's about 4.5 times. You have to get to 5 times equity value or more to basically get to the, kind of $3 plus that you're claiming. But again, I think the most important thing to go back here is, look, we're sitting on Wall Street where cash is still king. We are offering shareholders $17.6 billion more cash than the deal that they currently have signed up with Netflix. And we believe when they see what is currently in our offer, that that's what they'll vote for.
So he's right about that. They are offering more cash than what Netflix is offering. And although the offer is similar to the offer they made a week ago that got rejected, that offer wasn't a tender offer for all cash. And I think that's kind of one of the unique differences for why they're going straight to the shareholders and making the argument that they're making. Now, if anyone knows anything about Larry Ellison, he is what some people would call the king of hostile takeovers. As you can see right here, since 2003, this guy has rapidly made sure that he would engage in either an aggressive pursuit, aggressive negotiation, or a hostile bid to be able to get what he wants. He is the, I think, 4th richest person on the planet, $270 billion net worth. I mean, he wants to win. And it doesn't seem like he's easily going to lose. Now, the other reason this story is becoming so interesting to people is because, well, 2 things. Number one, Netflix already signed the deal, right? So they already signed the deal for $72 billion. That deal, or $82 billion, that deal doesn't include the TV networks. And so, yes, as Prunify is saying right here, Paramount wants to buy Discovery. They're offering more, but they're buying more. But they also want to take off the cable networks from Warner Brothers Discovery so that the sort of new spin company that will go public in an own independent way, which that company's probably not going to succeed in the public markets. I mean, let's be honest, that's linear TV. Like, that stock's not going to get bid up. So I think Paramount's argument is just like, hey, we already have the existing infrastructure. Why don't we just bring everything inside our house and keep it going from there? Netflix's argument is like, we just want the studios, and we think that we are paying an appropriate price for the studios. And, we are probably better people to sell to versus the Ellison family. And I think there's a world in which Warner Brothers is saying, yeah, we'd rather sell to the $400 billion behemoth that is Netflix versus the Ellison family. The bigger question is, why does the Ellison family want this so much? And that's where you get into the political angle of everything, which is where Trump comes in. So multiple conversations over the past 48 hours, multiple leaked texts, multiple memos have come out basically saying, this is from the Trump part of the administration, which is that he does not want CNN to be in control in the way that it's currently in control. Trump has had beef with CNN for a very long time. And again, Netflix won't have control of CNN because it'll be some new independent company. But the idea of Larry Ellison having control of CNN, I mean, that wouldn't be the worst thing in the world. And that would probably be very exciting for someone like Trump, given that he knows that Larry Ellison would likely be on his side of the aisle more so than if someone else owned it. By the way, these are the text messages from David Ellison to David Zaslav, CEO of Warner Brothers. He texted him right before the deal, just tried calling you about the new bid. We've heard all your concerns. We believe we have addressed them. And then at 4 p.m., didn't get a text for hours. He sent him this paragraph. You know when you like double text, it's like, dude, she's just not into you. Yeah, this is what happened here. He double texted and still they did not get a response. And then the next day, you get a Netflix acquisition that is reported. And then David Ellison realizes he just needs to go straight to the people and make his bid more public. So multiple parts of the administration are saying that Trump would like CNN to be controlled in a way that's a bit more friendly. Now, Trump has come out and says that Paramount is not my friend. Netflix is not my friend. He's trying to stay objective. He even said the other day that he was annoyed that CBS, which is owned by Paramount, had a 60-minute special with Marjorie Taylor Greene, which Trump is not a fan of. So, he was showing some level of discontent for what Paramount has been doing with their programming. But nonetheless, I think a lot of this is going to... Oh, and then we got the big report last night from the Wall Street Journal that Larry Ellison did indeed call Trump after the acquisition was announced with Netflix and basically said, hey, if you do this, this is going to be horrible for competition. I honestly, if you had to ask me which way does this get resolved, I have no idea. The prediction markets are leaning towards Polymarket, or not Polymarket, Paramount. Polymarket is saying that Paramount's most likely going to win this. They have, I think, like a 45% chance. And I think our boy Joseph Carlson had a great tweet on this right here that makes the argument for why it would actually be more monopolistic if Paramount wins this. Larry Ellison and his son will control TikTok with Oracle, Warner Brothers Studios, Paramount Pictures, CBS, CNN, all of HBO and Paramount Plus. They would also control most of every major cable channel, which HBO and Discovery own like a good 150 of them. And they would have distribution that is possibly even greater than Disney. I mean, at the end of the day, Netflix does not have that type of distribution. They have more subscribers, but they definitely don't have that type of distribution. One could argue it would make a massive behemoth just in Warner Brothers or Paramount in and of itself if that got acquired. Now, the bear case for Netflix is that if a Netflix acquired them, you have this massive level of intellectual property like DC, Batman, Harry Potter, etc., going over to Netflix. And Netflix, which accounts for, I think, 7.2% of TV time, YouTube's at like 12%, maybe that would allow them to compete with YouTube. So I really am not sure how this is going to play out. I think the question for all of us as investors want to know, how do we take advantage of this? First of all, I don't know if Warner Brothers is the best buy right here, because here's the worst case scenario if you're playing the arbitrage on Warner Brothers stock, which, look, I think some deal is going to happen because it's Warner Brothers and I don't think Trump wants to completely stop any type of merger. But what if the FTC just blocks it completely? What if they're like, hey, Netflix can't buy it and Paramount can't buy it because we want to keep more competition involved? And honestly, the best way to keep competition is for a merger to not happen. Like, because then you have HBO Max, you have Netflix, you have Amazon Prime, you have Disney Plus. You actually have like a real level of competition in the streaming wars. And this stock probably drops back to $12, right? There's no reason for the stock to be anywhere near this price if there's not an acquisition happening. So that right there would be not the best if you're holding on to it. If it does happen for Paramount, I think Netflix probably goes up because shareholders aren't the happiest that Netflix wants to spend $82 billion, and Netflix will survive even without this acquisition. So I think the stock will be okay. If it does go for Netflix, what if this thing drops dramatically because shareholders are just not confident about what Netflix is going to be able to make this play out, or how Netflix is going to be able to make this play out? So I don't know. I'm sitting out of this. I mean, I've been thinking about Netflix more deeply given everything that's been playing out, but I think the regulatory scrutiny on this is going to take time. Even if it doesn't take time, let's say Netflix does get to buy them, this thing's not rocketing up to 150 anytime soon. I mean, this thing is going to take some time to really play out. I think there's going to need to be a lot of inner workings to show to the street that this acquisition makes sense, whether it's for Paramount or I'm definitely not buying Paramount stock. That stock has been a disaster for a long time. So, I mean, realistically, the question is, do you buy Netflix or not? And I think even if it plays out, you give this thing time. You give this thing time. You see if Netflix can meaningfully make this accretive to shareholders. And the perception of having all of that content is super bullish, but that doesn't mean it's necessarily going to work on day one or even in year one. And so I think kind of being on the sidelines here is not that crazy. I don't know if Netflix is the opportunity of a lifetime right here on this Warner Brothers deal. But if it doesn't happen, I think there's a better chance that Netflix goes up in the short term. In the long term, I do think they need to get a deal like this. Because ultimately, like, Netflix needs better content. And this is a once in a lifetime opportunity to be able to get that content. Yeah, Netflix wants IP and Ellison wants media control. I didn't realize Larry Ellison is on this whole media power narrative that he's been going on. I mean, like, I know the guy's powerful, I know the guy has influence, but like the Ellison families, which by the way, the entire bid is backed by the Ellison family. So like David Ellison's like, hey, like we are backstop Netflix, like we're backstopping it with our equity, which is worth $400 billion. And Larry Ellison's like, well, I'm worth half of what Netflix is worth myself. I'm going to personally backstop this deal. So I guess they want to control a lot more of the media landscape, and they're going to really fight hard for this. Hopefully consumers end up winning at the end of the day, but this story is not over. And it looks like the story is going to be playing out for a long, long time to see who ends up winning. Yeah, Kushner is also in it as well. The Saudis are in it on Paramount. I mean, you've got all these different characters that are now entering the mix. And it's like, dude, who would have thought by the end of the year, one of the hottest media stories would be Netflix versus Paramount? Like, I did not have that on my bingo list, but there you go. And that's what's happening. And we're going to see ultimately how the street thinks of it. Netflix right there up a little bit in the pre-markets. Warner Brothers up 1%. S&P 500 is flat, down about 0.10% in the pre-market. Quick update on Grab. So we got an update right here from Benchmark. They reiterated their $7 price target. I think there's two things to talk about on Grab. Number one, and this is, I honestly didn't think of this for the past couple of weeks, but this also probably explains why Grab has been selling off. C Limited is down about 30% over the past month. I'm not even sure why. I haven't analyzed C Limited as aggressively as I probably should, given it's another Southeast Asian rival, but that stock has been hit. And so when you have a major competitor has way better margins than Grab and is going faster than Grab, when that drops 30%, you're going to have its rivals also probably drop with it. So I think that's one of the reasons it's been hit. Benchmark said this morning, we recently hosted the Grab IR team for a virtual investor meeting. The company is targeting sustained growth across its core segments, deliveries and mobilities, while maintaining stable incentive levels. Its fintech business is positioned for accelerated loan book expansion, has a clear path to profitability. The reason their share prices pulled back in recent months is largely due to profit taking and high beta outperformers, which Grab did get to 650. It was up almost 50% for the year. The company's characteristically conservative guidance, which the market had anticipated. Nevertheless, we believe fiscal year 2026 setup remains favorable. Grab continues to leverage affordability initiatives. In our view, the recent share price weakness represents an attractive entry point for investors seeking compelling opportunities for an emerging markets portfolio going into fiscal year 2026. So, look, I understand that people hate the price action. I get it. It's not fun having that as a heavy part of my portfolio. Trust me, if I had taken the money I put in Grab in the beginning of the year and I put it into even Nvidia or anything else, it probably would have generated even better year-to-date returns for me. But at the end of the day, I believe the stock is still undervalued. And I cannot fully control the price action. I think at this point at $5.11, it is stupid trading at these levels. I don't have the explanation for why outside of maybe the correlation with C Limited going down, but I've done the valuation work. And I think a lot of us have done the valuation work. Stock is cheap. Question is what changes the narrative? Obviously, you got the go-to thing that's probably going to resolve itself towards the end of the year, and we're going to see how that acquisition changes, how the company's thinking of it. But the volume over the past couple of days has also been around 40 million shares. Volume was dying out a couple of weeks ago. Volume has started to come back. Stock price has just been not cooperating. So it's one of those dog days for the stock where, with Hood down for 2 years at $6-7. Same thing with Palantir. Not saying Grab is Hood or Palantir, but you do have these periods where it's stuck and you don't know why it's stuck, but you do know everything is going up and to the right. You're waiting for the stock price to reflect that. If you don't want to wait for that, then there's plenty of other volatile names that are out there that, probably have quicker price action. But with Grab, I continue to hold it. And if we fall below 5, I will continue to add more. I already have a pretty heavy position, but if this thing really ends up getting lower, then I likely will be adding more. But yeah, all the analysts continue to believe $7 is the price target. You have some of the most bullish analysts at around $8. I think closer fair value is around $7.20, $7.30 right now. And we're going to see how this ends up playing out as we get into the end of the year. Waymo news, super bullish for Google. Now, Google went down yesterday. Not sure why they deserve to go down. We'll talk about, exactly the headline that caused it. But take a look at this. Waymo is now providing over 450,000 paid robotaxi rides per week. That's up from 250,000 per week just 7 months ago. This is absolutely incredible. I feel like we don't talk about Waymo enough. We know, Tesla robotaxi. By the way, I did download at 14.2 on my Tesla, and it's amazing. I've had it for about a week now. Absolutely amazing. There is a noticeable difference between 14.2 and 13.9. And so, I'm loving FSD on my Tesla, but Tesla is obviously not having 450,000 paid robotaxi rides per week. Now, once they end up scaling it and you have millions of Teslas functioning as the fleet of robotaxis, kind of that whole broader FSD thesis, then, maybe 450,000 is going to be a nothing burger in the coming years. But right now, Waymo's crushing it. And they've added multiple new cities over the past week. San Francisco, Los Angeles, Phoenix, Austin, and Atlanta is where they have 2,500 vehicles that are doing the 450,000 paid robotaxi rides every single week. So why was Google down yesterday? Well, there are reports that Gemini is getting ready to incorporate advertising in 2026. Google came out and they kind of denied it, even though, we know that ads are eventually coming to Gemini. And Google right there was down about 2% yesterday, down another 1% in the pre-markets. I think this is the dumbest reason for Google to sell off. I think this is a fake reason. Google is selling off because it's up 80% for the year and people are taking profits, not because they're going to incorporate ads into Gemini. Because quite frankly, if they incorporate ads into Gemini, that's going to be good for Google. They have 650 million monthly active users on Gemini. If they start showing you ads, they're going to start monetizing that. So I don't see how this is bearish unless the street thinks people will stop using Gemini because of the advertising, which is kind of stupid to me. So I think people are selling Google because they need to take profits. And that's fair. If Google closes below 300 and, it closes the year at 295, okay, Google will be up 63% instead of 84%. It's just not something that I think people should be too concerned over. Probably creates a better buying opportunity. Now you've got Buffett on your side. Google's still up 77% year to date, but it does seem like the profit taking is the bigger reason for the sell-off, not necessarily the potential in advertising. Now, the Wall Street Journal came out with an article about Sam Altman and this code red on OpenAI. I read the whole article this morning. It does seem, based on the leaked memos from Sam Altman to the company, which somehow keep getting leaked. You got some people in OpenAI that are constantly leaking these memos. We'll talk about the European Union lawsuits because they are starting to tax these American tech companies at a heavier rate. Sam Altman basically said we need to stop working on Sora, which is their video generation model. We need to stop working on enterprise. We need to just make ChatGPT better. And so the crux of his memo to the team was that if we make GPT better, we will have a chance to increase all the other parts of the business. But the only way we increase the other parts of the business is by focusing on GPT, which, by the way, I kind of think is the right way to. I mean, GPT, ever since I subscribed to it a couple of weeks ago, I'm now paying that $20 a month. It's become my go-to. I've stopped using Grok. I'm sorry, but Grok is not good. I love Elon. I pay the freaking $50 a month for X. It's not good. It's just not. It's not as good as ChatGPT. So I think if they focus on continuing to grow that is going to be a massive, massive tailwind for them. The question is, can they continue to focus on just the consumer side of the business and be able to scale to the point where they can spend the $1.4 trillion that they've guided that they're going to spend in terms of CapEx and grow as fast as they need to grow? I don't know. I mean, the model's good, but there's plenty of people that might like Grok because they have a different use case or might use Claude on a daily basis and they don't care that much about GPT. So Sam Altman's vision is kind of, hey, we're going to keep growing this and make it the best model. They already have 800 million monthly active users. Can they get to that billion? And is that billion going to be enough? And then you got this report from Meta. Meta is reportedly preparing a new proprietary AI model codenamed Avocado for Q1 2026, positioned as the successor to its open source Llama. I think Meta has to do this. Quite frankly, if you're long Meta, you can't, I think, just rely on the advertising business. You have to be wondering what they're doing with their CapEx, and their CapEx has to be having some type of AI product. In this case, it's probably a new model, and whatever Avocado looks like, whether it's for enterprise adoption, whether it's a follow-up to their series of llamas for the consumer use cases in Meta AI, it's got to be something that gets people excited. The problem is it just continues to create competition for GPT. And so I think OpenAI is in a pretty precarious position right here because obviously Google has way, way more distribution. Google is crushing it with Gemini 3. Nano Banana is off the charts. GPT is still, I think, one of the better models. 5.2 likely is coming out early 2026. But the fact that they've stopped focusing on all the other business initiatives just to make the model better. By the way, there was a lot of researchers who, again, anonymously told the Wall Street Journal that Sam Altman is sacrificing safety for growth because a lot of the things that they felt were unsafe with the mental health portions of the model, they feel they fixed. In fact, Sam Altman was on the Jimmy Fallon show last night. It was one of the most awkward conversations. I mean, again, the guy is a bit weird when it comes to these public interviews, but he's sacrificing what Dario, who created Anthropic, who used to work at OpenAI, really cared about, which is safety for user growth. And the question is it going to work? And is it going to be the best investment that OpenAI can make going into the future? Google doesn't really need to sacrifice all those types of things because Google has a lot of money, a lot of distribution, and a lot of time to be able to work on the parts of the business that don't need to make money. Like Gemini doesn't need to make a single penny for them because they've got the search business, whereas GPT needs to generate revenue today. Otherwise, a lot of these investors like SoftBank putting in $40 billion are not going to be happy in the next coming years. So we're going to see, but more and more competition is good for consumers. And ultimately, we're going to have to keep up with OpenAI and see if they can actually commit to the spending that they've said they can commit to. And that relies on the models growing as fast as they need to grow. Yeah, Avocado is the new Meta model that, it's the code name for the Meta model that will be announced probably early in Q1 of 2026 as per Meta. The description is it's a frontier AI model codenamed Avocado. And it doesn't look like it's going to be a open source model because Llama as an open source architecture kind of failed. Seems like closed source is the way for people to actually make money. I don't know why they called it Avocado, but yeah, it looks like that is the new the new model that they have. Jobs. So private employers added 4,750 jobs weekly in November. The street expected a loss of 13,000 jobs, came into an increase of 4,750 jobs. We'll talk more about what we've got with rate cuts coming up tomorrow. There's an 89.4% chance now of us getting this rate cut. I think this jobs data is minuscule. It's not going to be enough to take away from the rate cut. You know, you've got some people like Rick Reeder from BlackRock saying that we should be doing 50 bips tomorrow. You've got a lot more of the doves coming out just based on some of the labor market data that they're saying. I think we'll get 25. I doubt we're going to get 50. But the idea that we don't get any rate cut is likely not going to happen. So question is if it's priced in, and we'll talk more about if that ends up being priced in. But I do think there's a shot for the market to rip tomorrow if they feel the rate cut is a meaningful differentiator going into the end of the year. Here's Mike Wilson and his thoughts on what he's thinking for where the rate cut takes us by the end of December.
Data now is that the rate of change on both payrolls and layoffs peaked or bottomed, depending on which one you're looking at, in April, right when the market bottomed. So, and this narrative that we've had for a while now is becoming a bit more popular. We like that other people are kind of adopting it to some degree because they're looking for a rationale or reason for why the market's done when it's done. And that is very important for next year because A, it means the Fed has more room to cut than probably people think, okay, or they can do things with the balance sheet. And secondly, you're going to get a rotation now into the parts of the market that have not performed that well. That's our call for 2026.
Why would the labor market not being weak give the Fed more opportunity?
Well, because they're going to realize that the data itself is very lagged. I'm not blaming the Fed. This is tricky. I mean, it's hard. In real time, the data has not been weak enough to justify cutting more. But when they actually look at the revisions now, and that's what we do, we look at the revisions, it's very clear that we had a significant labor cycle.
We already came out of it.
And we've come out of it, which is very good. And by the way, the best confirmation of this is that the earnings growth now for the median company in the S&P is actually growing again, close to 10%. That's the best growth we've seen in 4 years. So there's evidence.
But you are counting on the labor data still being lagged for why the Fed will cut rates, that they're not going to pay attention to the things you're watching right now.
That's right. Well, I think what they'll notice is that if you want a recovery in the private economy, which we all do, right? We don't want to just have this bifurcated economy. They'll realize that we do need rate cuts for the financial leverage part of the economy, whether it's housing, consumer goods, the lower end consumer. We need that. And so the risk in this strategy, of course, for the Fed to think about is, do we have an asset bubble then, right? Because if they cut into that good earnings cycle, do we get kind of an inflated stock market? Our view is yes.
Asset inflation, and people are still worried about big inflation. The overall term inflation, people are still, we're 3%.
Right.
The lagging numbers there, it would indicate what in your view, that it's not a problem or it is a?
Well, I mean, it's sort of a feature, okay, quite frankly. Like in other words, and we said this last time, if we don't get inflation next year reaccelerating, then our call is going to be wrong. In other words, accelerating inflation is good for company earnings for the companies that have been lagging. But it's bad if the Fed is raising rates for the stock market. This time around, right, we have a Fed that's not going to be raising rates. I don't know how much they're going to cut next year, but it's unlikely they're raising rates, and they're probably going to add liquidity to the balance sheet at a time when accelerating inflation is driving better earnings growth. That's a very good setup for equities typically.
And you know what else? Hassett was on yesterday, and he said the way administration handles the affordability issue is by wage gains. I think they've given prices that, energy prices can come down, food prices can come down, but in general, inflation doesn't come down unless you got serious overall problems in the economy. So how do you deal with affordability? Wage growth has to be faster than the inflation.
And productivity.
And productivity.
That's
right. And
right.
you think that's possible?
Well, yeah, I mean, that's what the policy change is trying to do, right? Is that
Which policy? The BBB?
All of the fiscal policy, let's think about this. So they're trying to reduce consumption, okay, increase investment through the big, beautiful bill and through tariffs. That reconfiguration of how the economy grows should lead to better productivity. The big one that there's debate on, which I don't think is really that debatable, is immigration, right? So this, legal immigration, unfettered immigration has really suppressed real wage growth, to your point, for the middle income, for the lower income workers. And then if you think about AI suppressing wage growth, perhaps at the upper end, that's a nice rebalancing potentially on the real wage. Look, this is not it's not going to guarantee it's going to work, but I like that strategy as a way to rebalance the economy.
And quite frankly, I don't know what other strategy we have I mean, Mike Wilson is talking about how the one big beautiful bill essentially said we're going to decrease or incentivize the decrease of consumption and increase or incentivize the increase of investment, which is exactly what we've been seeing across these tech companies that have been investing in CapEx. We know that 50% of GDP since 2023 has been because of big tech CapEx investments. If that didn't happen, we would not have the market that we have today. We would not be growing the way that we're growing. It continues today with Microsoft, $17.5 billion investment in India, particularly on sovereign AI and AI infrastructure. I mean, I think this is just going to continue. You're going to see a lot more of these tech companies say that we need to continue investing across the entire world simply because A, this is the opportunity of a lifetime with AI. B, the one big beautiful bill is creating the incentive for them to continue investing and not stop in any meaningful way. On top of that, the other thing that we're seeing from these tech companies is the continued focus on where their margins can enhance. Ed Yardeni came out yesterday. I really was surprised by his take. He's been analyzing the stock market for like 40 years now. He said go underweight the Mag 7 for 2026. And my gut reaction is I disagree. I was very surprised that he said that. I think the reason he came out and said that was, well, there's two reasons. The more obvious reason is that the Mag 7 have run too much and that you need a new idea. And that new idea likely will outperform the Mag 7, although Amazon's up like 1% year to date. So I'm like, Meta barely up now after the fall. Like, I still think the rich get richer, and that thesis is very intact. The more cynical reason why I think he came out and said that, quite frankly, is just for attention. I mean, when you're an analyst, you need new ideas to get people to get excited about you. And Ed Yardeni is someone I respect very deeply. So it left me wondering, it's like, dude, you've been bullish these names for the past 7 years now. 2026 is the year to get bearish when we're about to see the ROI from all their CapEx. I mean, like, why else would you come out with this take that says, oh, go underweight the Mag 7 and go long the S&P 493? It's like, we know the S&P 493 don't have the balance sheets, don't have the buybacks, don't have the net income, don't have the free cash flow. They don't have anything that the Mag 7 have. They're good companies, but they're not the Mag 7. So it was just very, very weird that you had some prominent people coming out. And I think because of his influence in the investing community, you're going to get a lot of people, just like you had at the end of 2024, say the next year's trade will not be the Mag 7. Because they're looking, last year was small caps, which small caps have done well, but the Mag 7 haven't done horrible this year, especially if you bought at the April lows. And so I think you're going to get a lot more people trying to look for that new idea. I continue to believe the best idea is still the Mag 7, and I reserve the right to change that opinion as we get towards the end of the year. I'm trying to look deep into Ed's thesis and see, is there something really serious that he's talking about that should concern people around the Mag 7? But every time you actually take that argument seriously, you just go back to the fact that it's the Mag 7. And it looks like they're not going to be slowing down anytime soon. All right, we got 10 seconds until the market opens. Last thing before we open up the markets, this is our president on how the economy is doing in the United States of America.
Pretty good.
But I do want to talk about the economy, sir, here at home. And I wonder what grade you would give
A
your
plus.
economy. A plus.
Yeah, A plus, 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 plus.
Well, it's interesting.
Pretty good.
All right, the stock market, thank you everybody for being here, is now open. An A plus bell as we are back for the market open. Thank you everybody for being here. And again, I'm sorry for missing it yesterday. Thank you everyone who reached out with all the messages to get well better. Really, really meant a lot. Happy to be back and happy to open up this market. All right, let's get into it. Nvidia, 184.97. That's down about 0.31% on the day. Nvidia got some good news after hours yesterday. Market's really not giving it any whatever premium. Got up to 190 after hours, but still getting hit. Grab 2% down. I really think this is stupid. 508. If it goes below $5, it would be quite interesting to me right here, but that's down 1.45%. I do think the shorts are more in control of the stock now as well, as the stock is getting hit, and it's basically been getting hit for the past month. The Qs are down about 0.27%. Nebius down 3% right here. Iren still down about 2% on the day. Rocket Lab breaking 50 yesterday was really important. We had an update this morning on Rocket Lab around their Hungry Hippo initiative, which ended up getting them a much clearer path to the Neutron launch. So we'll talk more about that in a second, but that was the update this morning, and that's why that stock got a little bit of a boost in the pre-market. Carvana, which is now in the S&P 500, that's down about 1.5%. This is outperforming all of the Mag 7s. Speaking of names that are outperforming the Mag 7, Carvana has outperformed all of them by 2 to 10x over the past 5 years. So that name has just been pretty incredible. Duolingo right there. Wow, back above 200. I didn't even see that yesterday. So Duolingo hit 210 right now at 203. BMNR 3474. That's down 3%. Palantir did hit 184. That's down to 180. Is Meta getting hit? Meta is getting hit, down 1%. Hit 675 yesterday. Not sure why it's down 1% right here. They came out with their news about the frontier model, or at least Bloomberg is reporting a frontier model potentially by Meta. Not sure why that's bearish, but the street doesn't like it. Nvidia still down about 1%. S&P down 0.08. SoFi down 1.3. SoFi unfortunately did not make the S&P 500. Next year most likely will happen for SoFi and Reddit, but this year was not the chance for it. Reddit right there, 232. That's down about 1.3%. Amazon as well, just like Grab. I think some of the price action on this stuff is really, really ridiculous. I think there's no reason for Amazon to be trading at these levels. I really don't. And sometimes buying up the beat up names going into next year, is the way that you get some more asymmetric returns, even though it sucks to buy them in the short term. Amazon should not be at $225 after those earnings. But nonetheless, that one's getting hit from 260 last week or 2 weeks ago. Nebius right there, 97.50. That's still down 2.8. Robinhood, 134. If we hold up the 130s, I will be very happy to end the year. Robinhood is entering Indonesia as they've acquired a new brokerage, which I think is super, super bullish. They're not entering Singapore towards the end of the year. They said in the beginning of the year they would be entering Singapore. I guess whatever deal they had for Singapore didn't go through, but they are still expanding globally. That was the one thing I didn't know if Vlad would actually be able to get done by the end of 2025, and it looks like they are making that happen. Singapore is not happening, but Indonesia will be happening as they acquired a brokerage going into the end of 2025. So it seems like they're going to get another 20 million customers going into 2026. Palantir right there at 180, Bitmine at 34.84, whereas Oscar's at 16.83. That one's actually up a little bit on the day. Most stocks are red. Insurance names are getting a little bit of safety today. Amcor hit 45.50 yesterday. Amcor back at 44. Even holding the 40s, I think, is incredible for Amcor. Tesla also holding the 430s. It's pretty cool. This was at 450 last week. Eli Lilly's up. Elf is up a little bit. GM and Ford are up. Microsoft trying to get back up to 490, which is nice. This was at 465 last week after that report from the information. AppLovin, look at that, trying to get back up to 700. Is not too horrible. Rubrik did have amazing earnings. If you bought this thing back at 70, you've done very well, 90.41. Adobe's been having a hell of a week. Tomorrow is going to be very important for their earnings. Same thing with Oracle, which is now at 220. Oracle got all the way to 185. I feel like Oracle is going to pop on earnings because they're going to increase their RPO estimates, and it's going to have nothing to do with OpenAI, and they're just going to show increased cloud computing demand from another AI model that's paying them, maybe Anthropic. But I don't know if it's enough to take an earnings play on Oracle, just given the fear of their debt. That's definitely getting people a bit more scared about their spending commitments. Cypher right there, that's up 1.2%. TeraWulf's up a little bit. Big Bear is down about 1.4. The quantum names have had a pretty good recovery. D-Wave was almost, I think, below like $18 2 weeks ago, now back to 27. So that one's down 2% of the day, but still green over the past week. And then Walmart is replacing their CEO. That stock 113.63, basically at an all-time high. $905 billion market cap on Walmart. 116 was the all-time high, so the trading just below that at 113 on the day. Over Kaiser says, I'm Indonesian. Hood will be getting a lot of money here through crypto. A lot of Indonesian people trade crypto. Yeah, Indonesia's population is greater than the United States, which is crazy. And crypto in Southeast Asia, especially in Indonesia, from some of the research I did over the weekend when this was announced on Sunday night, is a big deal. And you can understand why, right? Local currencies are not necessarily the easiest to trade, definitely not the easiest to transact different business deals in. And so crypto ends up becoming an alternative. So I think from that perspective, it makes a lot of sense for Hood to go to Indonesia. And they're going to be capturing 19 million customers as per the brokerage that they acquired, which should be adding a lot more to the overall assets under custody. Meta getting hit right here, down 2%, 657 on Meta. 657 on Meta. Oh, you're right. Indonesia's 280 million. Yeah, you're right. America's 330. I thought Indonesia was 350 million. Yeah, you're right. 280 million. Still rivaling the size. 283 million in Indonesia. United States at 330. I mean, rivaling the size of the United States. So I think it's a massive, massive market that Robinhood is meaningfully going after. I'm just happy they followed through with their international commitments by the end of the year. So I didn't think they were going to, just because they've been working on so many different things. Companies say stuff, but sometimes they don't follow through on it. And I wouldn't have given them any flack if they didn't, because they've done so much this year. But the fact that they actually came through at the end of December and said, nope, we are still expanding internationally, I thought was pretty impressive. S&P going green slightly on the day, 683.60. Google at 312, that's down about 0.3%. Reddit still down 1.4. Netflix getting a little bit of green, basically flat at 96.70. Where's Bitcoin? I haven't looked at Bitcoin, honestly, for like the past 2 days. 90. Okay. I'd rather it be 90 than back in the low 80s. It peaked at 93, I think, last Friday. 90,500 on Bitcoin. Galaxy did get a $60 price target by our boy Devin Ryan. I didn't expect that. Devin Ryan is an analyst I have a lot of respect for. I didn't read his report yet. I have his report. I have to go through it, but $60, I guess his AI HPC choice out of all the Bitcoin miners was Galaxy. So Galaxy right there up 3.12% with a $60 target from Mr. Devin Ryan. Does HOOD need legislation in Indonesia for crypto sales? Honestly, I have no idea. I've not gone through the acquisition in such depth, but I'm sure whatever legislation or regulations they need to get done, they've probably thought about it for a long time. I just think getting the international expansion opens up the floodgates for expanding internationally. Like once you get it in one part of a region, they can hopefully get it in other parts of the region. So question is just how fast now will they be able to get this done? Iran right here. They did their capital raise a couple weeks ago. Street didn't like it initially, fell below 40 for a hot second, right back to 46. Seems like the street is kind of okay with them raising about $2 billion right here. Nebius still down about 2.4. Nebius acquired some land today. Where did they acquire it? They acquired it in Missouri, 398 acres. It's an AI data center campus that could scale to 8 to 10 buildings and deliver 800 megawatts of capacity. This would be the first data center in the US that Nebius fully builds and operates itself. So they officially acquired some more land in Missouri along with New Jersey, 398 acres, which was announced this morning. IONQ, that's back at 54. This thing wasn't this thing like below 30 or something? This thing got to 38 in November. Like even names that really don't have massive like growth or earnings, they've recovered with the market, not to their all-time highs, but they've still recovered pretty decently. And so you're seeing a decent level of breadth and consolidation that's been happening. That's not been horrible to see. AMD right there at 220, and then Nvidia at 184.79. Charlie says, I'm in Missouri. We got data center spots all over. The big, beautiful bill really did incentivize the building of data centers at scale, especially with the zoning law changes they made. So it makes sense that Missouri is getting that. Hassett is live. Okay, let's go to Hassett, who likely is going to be our next Fed chair. We'll see if Trump announces that by the end of the year or not. But that's going to be a big one. I don't see Hassett live. I know he was live yesterday. I don't see him live right now, but when we do see him, we'll pull it up and see what he is saying. The 10-year, by the way, is where we at 4.153. So that one's still a little aggressive, above 4%. Not something we want to see on the 10-year, 4.153. This thing was freaking below 4% a couple weeks ago. So the credit market's definitely saying, hey, not too fast. The thing about the 10-year, which is annoying, is that the rate cuts have not officially come down. Or sorry, the rate cuts have happened, but the rates have not meaningfully come down, interest rates. So it's like the yields aren't reflecting the 10-year. The 10-year yield is not reflecting interest rates coming down, and that just shows a lack of confidence from investors to actually buy up bonds, even though the Fed is lowering rates. This was the Rocket Lab headline. Rocket Lab clears significant milestone on its path to its first Neutron launch. Rocket Lab's Neutron launch vehicle's innovative Hungry Hippo captive fairing has successfully completed qualification testing and is en route to Virginia for Neutron's first launch. Hungry Hippo is a captive payload fairing that stays attached to the rocket's first stage through launch and landing. Instead of dropping its fairing like traditional rockets, Neutron opens the halves to deploy the second stage and payload. So that is, I think, one of the reasons Rocket Lab got a bit of a boost in the pre-markets. 51.24, almost hitting 52 right here, as Neutron becomes closer than expected. What is wrong with SoFi, dude? Almost below 27. Yes, I do think we're getting jolts today. Let me make sure. But I think in about 18 minutes, we should be getting jolts, which also could be the reason the market is waiting for some data. Yes, in about 18 minutes, we will get jolts. Probably is not going to be the best. Well, the jolts is for September, though. Oh, no, we get up September and October, right? Okay, we're definitely getting September. It says we're going to get October. I don't know if we're actually getting October. We're not getting PPI for October. The BLS came out yesterday, said no PPI for October. So, I mean, you can't have inflation if they don't give us the data. So I wonder if we're going to get jolts for October. SoFi right there, 27.10, down 1.8%. Jolts are job openings in America. So how many jobs are open? And then, the Fed can kind of make a decision on if there's less jobs open, should we be easing monetary policy to stimulate the economy to incentivize employers to hire more. Robinhood right there at 135.60, down 0.36%. SoFi did complete its dilution yesterday, but that news was pretty baked in for the past 72 hours. So and they completed the dilution at 27.50. By the way, shout out to Data Driven Investing. He got a job at SoFi, which is absolutely crazy. I mean, that is so cool. He's going to be working for the office of the CFO. So unfortunately, he will have to shut down his Twitter account and YouTube account. But and he won't be able to talk about the stock anymore. But that's super cool, dude. I mean, I did not expect SoFi to actually reach out to a retail investor. And for anyone who's followed Data Driven's work, I mean, his analysis on SoFi's financials is like, I mean, I have not seen anyone analyze the numbers the way he has. And he has a legit job at the company, which is crazy. So unfortunately, we are losing a really, really prominent voice in the retail investor. Part of the reason I bought SoFi years ago or even continue to hold SoFi is because of his analysis. And so unfortunately, he's leaving the retail investor community, but super awesome for him to actually get a job at the company. This proves there are some jobs out there. That is true. This does prove there are some jobs out there. He leaked too much, so they decided to keep him in SoFi. I can't imagine that's not one of the things they thought about. It's like, dude, this guy is analyzing our business so well, we might as well just bring him in the company. Navigate it like that. We do have a quote from Hassett. Hassett responds to a question on how low the Fed should take rates. He says, must recognize this is a transformative time like the 1990s. AI is bigger than the computer for productivity. So you've got Hassett once again arguing that we need to get these rates to come down. By the way, October saw 153,000 job cuts, the worst October in 22 years. And through October, we have 1.09 million layoffs. This is a 65% jump from last year, and it's the highest since 2020. So again, that's your bull case for a rate cut. When you see numbers like that, it's unlikely for us to not get a rate cut when you see the labor market start to weaken in the way that it's weakening. 89.4% chance. 89.4% chance to potentially get that rate cut. Didn't you and DDI go back and forth with each other? Yes. I think we had some healthy intellectual debates on Robinhood and SoFi. Ultimately, I still think he doesn't fully understand the Robinhood thesis, and maybe he thinks I don't fully understand the SoFi thesis. But those are healthy debates. Those if you're a public figure and you're going to be analyzing stocks, it's fun to have those debates. Nonetheless, I have a lot of respect for the guy. I just disagree with him on some of the ways he philosophically thinks about Robinhood as a company. But I just think it's a big win for retail, for someone to get a job at that high. The office of the CFO is a big deal. Like, to be directly under the chief financial officer of a fast-growing company like SoFi and to be meaningfully contributing, that's a really big deal. So I'm very, very happy that he got that job, and I do think it's going to be really good. It makes me more bullish for SoFi, quite frankly. Why is Meta continually getting hit today, bro? 1.7% down on the news that they're releasing a new model in 2026. Is the market like bearish that they're releasing a model? Doesn't the market want them to release a model? That's weird. SPY goes green. Hoodie about to go green. 136.41, trying to break 137. Galaxy up 4% on the day. Rocket Lab very close to going green as well. And Meta is still down. Oh, yeah, the Google glasses. I forgot about that. I saw that in the morning. That's a big deal. By the way, Accenture partnered with Anthropic today to train 30,000 consultants on how to use AI. So you've got more and more AI tech companies working with these consulting firms to work together. Yeah, so Google glasses, essentially Google's coming out with a competitor to Ray-Bans. Meta Ray-Bans. I mean, Google has tried glasses in the past, but this one seems like a more legit competitor. Could that actually be the reason, though? Google says their first AI glasses will arrive next year. They did demo this stuff back at this the Google I/O event, I think in July. This is when the stock was at like 140. 2026 looks like when it's going to come out. I don't know if this is really a bear case for Meta, though, dude. Like first of all, glasses as an industry is not that big. So it's not like Meta has this massive market share that's going to be destroyed by Google. And even if it is, who cares? Like, it's not like Meta's selling that many glasses. So if Google takes half of what they're selling, it's like, you're not buying Meta for the glasses right here. But nonetheless, the street probably will react to that. HIMS right here, finally getting back above 40, which is nice to see. That's up 3.3%. It's that one holding on to a little bit of green. The rapper that I had on the stream yesterday, 24K Golden, he likes HIMS a lot. And he thinks it's like a legit product or a legit solution for a lot of people, especially in the context of hair loss, which again is a real thesis for HIMS. It's just, you got a lot of credit card data coming out by all these banks, and they're looking at it and they're saying Q3 is not going to be that good. They missed on EPS by 40% less. A lot of the excitement and momentum on HIMS has died down, but the long-term thesis, this like Netflix of healthcare, is not really gone. That thesis is still very much alive. It's just, the past couple quarters have not been the most exciting. So I don't know if this thing gets back to 70 anytime soon, but still, even with the decline from 70, it's up 60% year to date. Can't be too upset about that stock price performance. Galaxy right there up 4%. Bitcoin getting a little bit of a move above 90, and then Adobe at 340 as well. Oh, Hassett's talking at the Wall Street Journal conference. Okay, so Kevin Hassett at the conference is asked how low rates should go. He says, what we have to do is recognize that we're in the 90s. We are in a potentially extremely transformative time. You have to watch and make sure inflation doesn't take off. Someone says, how much lower? He says, you have to watch. He says, there's plenty of room to cut rates. Someone says, what would you do if Trump wanted you to cut rates and you didn't think it was the right thing to do? He says, well, if inflation has gone from 2.5 to 4%, then you can't cut rates. So basically, he's saying, if I see a meaningful increase in inflation, I wouldn't cut rates. But he's arguing that we're not seeing that meaningful increase in inflation. Which, I mean, he's right about. You're seeing inflation go up, but it's not going up that aggressively. Wow, gold is pushing 60. Or sorry, not gold, silver. Gold is back at 4,200. Has silver ever broken 60? I don't think it has. My goodness, 59.14, up another 2% on the day. The commodities trade, not dying down. Someone just sold 8 million of puts on Tesla, strike price 430. That's bullish again when you're selling puts. It means you're ready to buy those shares at the strike price for January 9th, 2026. January 9th, 2026. 24K silver is my new rap name. That's crazy, dude. That's absolutely crazy. Silver, one of the trades of the year. One of the trades of the year. SoFi starting to recover a little bit. Robinhood pushing 137 right here. 136.70. They're going to have an event on December 16th around prediction markets and AI. Again, I think prediction markets, I think people are really underestimating how big the TAM is for that industry. I think it's going to keep growing and growing and growing. Kalshi is like number one in the entire App Store. I think it's number 5 in the App Store. It's number 1 in finance. I think it's going to be a really big industry. Vlad did a great job on the podcast with the Compound and Friends. And, they talked about prediction markets. And they were just like, dude, are you seeing what we're seeing in terms of the excitement for it? And he was unequivocally saying that Robinhood is seeing a behavioral change in the type of demand that consumers are engaging with when it comes to this product. And, the business is a $300 million run rate right now for them with 3 billion contracts every month. So I think it's only going to be a bigger business for them over the coming years. ServiceNow, that's at 853. They did approve a 5-for-1 stock split last week. Ares Management, which is like a private equity firm, they are getting into the S&P 500. They are officially getting into the S&P 500. That was announced yesterday as well. It didn't feel like Vlad liked the compound guys that much. I think he had a really good podcast. The problem with the compound guys, and I've said this time and time again, they don't let the guests talk. Like, I love those guys. I listen to the podcast every week, but they just don't shut up and let the guests talk. They always, like, if you're going to interject, you've got to interject and say something smart or say something that adds value. They say something that's just like, dude, like, shut up. We're not at a bar drinking a couple beers. Like, it's a podcast about finance. Like, let the finance guest talk. Maybe it's the New York in them, but it's really annoying, dude. Like, you're just like, you get, and because I've interviewed Vlad a couple times. One of the things I learned about him is that he takes a long time to speak, and you got to give him the time to let him present it. He's a very slow talker. But if you ask a good question, you'll get a good response. And he's like midway trying to get through his answer and they'll interrupt him. And you can tell he's just like a little startled by it because he wants to finish his freaking answer. And that's the most annoying part about that podcast. So I think Vlad did a great job, but I think they just have to let the guest let him cook. Actually let him cook. All right, who's long Oracle and Adobe going into this week? I'm going to put a poll in the chat. I asked this last time at this exact same price on September 8th, and Oracle went from 220 to 350. I don't know if that happens again. A couple of you guys actually bought calls the day before that and made some good money. But I really wonder if the software names show up for the end of the year. Long Oracle and Adobe this week. Oracle, Adobe, both, or neither. What do you think? Meetup details will be coming out soon. Again, I'm doing a stream with my new manager on Friday. That'll be at 7 p.m., 7:30 p.m. Eastern. So we'll have some details on the meetup on that stream. But this weekend we'll have details, and then next week we'll have a lot more details. But yes, New York meetup is happening. Likely is happening February 1st over January 25th, because I forgot the AFC Championship is on January 25th for football. So probably going to do it February 1st, that Sunday. And yes, we'll have more details on this going into the end of the week. Oracle is slightly flat. Again, Nvidia's down because China came out and said we don't want the H200s. Basically, that's why Nvidia's down. Otherwise, Nvidia would be at 190. So Trump is willing to sell them, or Trump is letting Jensen sell them, but China doesn't necessarily want them. Now, granted, I think China's going to still get some of them, which is net positive, but the street's moving on that narrative, and that's why Nvidia right there at 183 is down on the day. Yes, we will do Technical Tuesday today as well. Jason sent me a gift, by the way. I'm going to show you guys on the stream on the market close, but it's a pretty dope gift. So I will show you guys when I'm live with Jason. It was super cool. Even my mom saw it. She was like, wow, this is amazing. So shout out to Jason, but I'll show you guys the gift once we go live today. S&P 684, I ran at 47, then ServiceNow at 858. All right, in 5 minutes, we're going to get jolts for September. CrowdStrike is up as well. The street is expecting 7.2 million. Wow, CrowdStrike, all-time highs. 7.2 million jobs. Sorry, not all-time highs. 550 is all-time highs, but 525 is where we're at. Right here, kind of like intra-month highs. Now, the thing is, I don't know if this jolt is going to matter that much. Oh, wow. I just saw a tweet that I didn't expect to see. Wow. Okay, hold on. Let me show you guys this. Real quick on jolts. This is September jobs report, so I don't know how much it's going to affect the data because, like, it's been 2 months since September. So we'll see if we get October. As you can see right here, it says October, but I don't know if we're going to get it. September, Street wants 7.2 million. But even if we come in higher than expected, like, does it show a healthy job market if October, we had many layoffs and that could have massively affected the job openings? So, I mean, we're going to have to see if the street really does react to this. Yeah, this is the tweet that I just saw. Some of you guys just put it in the chat. Our boy Chris Patel is long Nvidia. Wow. Did not expect to see that. While some people may be waking up to the China export of H200 lift, but China not wanting to buy and reversing some of the gains, I'm seeing something different. The president of the US knows what Blackwell Rubin chips are. Dude is out here tweeting about it and willing to allow sales. Trump is a lot of things, but the one thing he's really good at is selling. Expect NVIDIA to get a massive boost in AI chip sales going forward, if not directly from China, indirectly from China. Also, another catalyst, other countries are likely to start a wave of AI spend to not get left behind. NVIDIA chart is showing that they will clearly break out in the next few months. Okay, so we Chris, if you're in the chat, let us know. We finally got our boy on the NVIDIA train. All right, I love it. I mean, I've been waiting for this moment for a long time. I think Chris's biggest concern about NVIDIA has been the cyclicality of semiconductors, which is a fair critique. But given NVIDIA's earnings growth, I mean, you kind of throw cyclicality out of the window. Unless you genuinely think AI is fake and that everything's cyclical, or not everything's cyclical, but that this current moment in time is so unbelievably cyclical that they can't grow at the level they're going to grow at. I think it's inevitable that the stock gets re-rated much higher than what it is today simply because of the earnings growth. It's just that simple. The stock cannot be trading at 23 times earnings going into next year. It's just going to be too cheap, especially if we're in a bull market. So I think it makes sense. And the Trump angle also makes a lot of sense. I mean, again, the fact that Trump doesn't want to sell Blackwell and Rubin to our adversaries means that he understands how valuable those chips are. If you believe Jensen on the $500 billion guidance, you believe the beat and raise cycle that NVIDIA has been going through, and then you believe that any level of additional spending from the sovereigns, including China, will increase the earnings estimates, NVIDIA is cheap. And I know the stock's been stuck for the past couple of weeks, but it doesn't seem like it will be stuck going into 2026 if they put up that earnings growth. Robin right there hitting 137. Oracle at 221. We should get Jolt's data in about 2 minutes. Adobe, that's at 341. And then Amazon going green at 227 as well. Steve told Chris to buy NVIDIA. Dude, Steve's been telling Chris to buy NVIDIA since freaking August of 2024. We were on a three-way phone call after NVIDIA's Q2 2024 earnings. I think it was like at $130 or something. And I hadn't initiated an NVIDIA position either, but Steve was telling both of us that, like, it's hard to deny the earnings they're putting up. NVIDIA is the one company that's not getting a massive premium in the market for putting up massive earnings because, I mean, quite frankly, because of people like Michael Burry spreading all this FUD about NVIDIA. I mean, when you've got this much fear of an AI bubble and NVIDIA being the linchpin of that bubble, which is stupid because all these other stocks are getting all this momentum, but the reason they're getting any excitement is because of AI. NVIDIA is at the center of AI, but NVIDIA is not getting the momentum. It just becomes stupid. But it also is healthy because I think it keeps us not euphoric. Now, I think if we get to $200, that's not euphoria. Probably 230, 240 is pushing it. But getting anywhere near back to 195, 200 is not euphoria. And I think we should be able to get back there just based on that earnings growth from NVIDIA. Okay, Jolts, don't have it yet. We should be getting it soon. I'm looking at it right now. Street wants 7.2 million. S&P, a little bit of red candle. What did we get? Oh, we got October. Okay, we got September and October. So the street wanted 7.2 million in September. We came in way higher than expected by about 400,000, 7.65 million. Then street wanted 7.658 for October. Street came in at 7.67. Basically in line with expectations. Job quits was 2.9 million in October, 3.28 million in September. So the way to interpret that is that if you believe these are real jobs and not fake jobs, we have essentially 500,000 more jobs than expected since September. October is basically in line. So if you ignore October expectations and look at September, I mean, I guess that's bullish. because there's more jobs than expected. Now, are people getting hired just because there's more jobs? Not necessarily, given October was one of the biggest months of layoffs that we've seen in about 10 years. Fed rate cut probabilities are at 89.2%, so not too affected. I don't think that good news will turn into bad news for the rate cut, because I still think we're going to get the rate cut, even if it's a hawkish cut, which could affect the broader market. But that is the jolt that we have. Let's get a little bit more coverage on that, and then we'll keep going from there.
670,000. That's not a bad number. 7,670 actually would be the strongest number going back to May, when we were 77.7 million and change. So that's pretty decent. And considering that the expectation was for a number around 7.1 million, so it's definitely better than expected. We're also getting leading economic indicators, which have been leading us in a negativeville lately. This is September read coming in exactly at his matching expectations at down 0.3%. Last month upgraded from -0.5% to -0.3%. And believe it or not,
well, market likes it. Starting to go green. Ethereum in particular, S&P as well. All right, let's see. Market seems to like this data so far.
-0.3 is actually the best number going back to July, when it was up 1/10, because we really have been mostly negative. We've had one non-negative reading all year, and that was the up 1/10 in July. We also had a 0 reading. So this is the 7th negative reading of 2025.
Wow, dude, ETH and Bitcoin. All right, you guys think it's fake or no? You guys think it's fake or no? Is this a real candle, or this candle is going to be crushed in the coming hours? 31.50. Look at that. That's a hell of a move right there. Same thing with BTC, just hit 91. That's a $1,000 candle. A lot of you guys saying fake. You know, I really want to believe it's real. Look at Robinhood trying to push 138. I kind of think it's fake as well, though. I really hope I'm wrong. But that big of a move on Jolt's data to me seems a bit irrational. It's good. It's not like phenomenal. And there's nothing uniquely that's affecting global liquidity based on that Jolt data. It's not like we got a rate cut or anything that justifies that massive of a candle move. It's good data. I don't know if it's enough to hold that type of a move. Nvidia right there trying to go green, getting a little bit of a candle up. Even hoodie, like I don't know if we're really going to be pushing 140 here. Unless the market is thinking of something else besides Jolts. They might be interpreting it in a different way. Even the S&P trying to push back to 685. The 10-year bonds are going up, which is not good, or yields are going up, I should say. It's really weird that yield, I mean, it's not weird. I mean, if you think about it logically, but conventionally, yields should be going down on the idea of cuts coming through. And unfortunately, like, dude, this is the highest we've had the 10-year in a minute. It's the highest it's been since August. August was at 4.3. So it's basically the highest in 4 months. And I think that's because the market is a little concerned that we're cutting into a hot economy. This is where the Fed's job gets hard because they have to manage the labor market and the inflation expectations, which is why we're probably not getting 50. But I still think we'll get that 25 tomorrow. Okay, so here's the question then for tomorrow. Where's Tesla, by the way? Tesla, 443. Tesla's liking this. And then Palantir 182. By the way, I'm going to have an interview coming out today with the people that worked on the Palantir and Nvidia partnership. I'm going to have a bunch of interviews coming out. It's going to be like one compilation video today, but on X, and the first video in that compilation will be interviewing the people that set up the Palantir and Nvidia partnership. So that'll be out later today, and I think there's some good takeaways from that. But Palantir right there at 182, Tesla at 443. Here's the question for tomorrow. Do we think the rate cut is priced in? By the way, 27% of you are long Oracle, 14% Adobe, 13% both, 46% neither going into Adobe and Oracle tomorrow. Rate cut priced in. If you say yes, that means we're probably not going to make a massive move tomorrow. If you say no, you're expecting some type of market reaction that is positive towards the rate cut. I'm going to go with no. I understand why you would say it's priced in. It's the most anticipated rate cut of all time. So yes, it's priced in. But I also think the market really wants this cut. And it's not an August pivot type of J-Pow FOMC where, you know, in August when he said we're more likely to cut than not, that just completely made everything green. But I do think it's going to be bullish. Now, could it be a hawkish cut? Yes. And I know conventional wisdom says J-Pow is going to be more conservative tomorrow. But I also think there's a world where they're going to say the labor market is not in a good spot. And that's enough to create excitement in the credit market or at least in the stock market, maybe not the credit market, to think that the cutting is going to continue into early 2026. Now, maybe I'm dead wrong on that. And I think it is a bit contrarian to say that it's not priced in, given, you know, basically we're at all-time highs on the S&P. It's hard to say that it's not priced in, but I still think we get a move tomorrow. I think we get a little bit of a move tomorrow, even if it's not 1%, you know, maybe 0.5% on the S&P, which gets us closer to that all-time high at 689. We're at 684 right here on the S&P 500. Hawkish dot plot and speech will take any pump. Do we get the SEP tomorrow? Do we get summary of economic projections? I think we do. Oh, that's actually another thing to consider, because if we get the SEP, that creates even more data that the market's going to be navigating. We do? Okay. Yeah. So then we have to look at what their trajectory of rate cuts look like. Not only if we're going to get a rate cut or not. Bitcoin trying to hold that $1,000 candle. Same with ETH. But they're not really building on that. BMNR right there just went green at 35.90. Tom Lee did buy another 415 million of Ethereum last week. That was disclosed yesterday. So he continues to add more. ChatGPT, nearly 900 million weekly active users. I think this was reported by multiple sources yesterday as well, especially by the Wall Street Journal. So that makes sense. They will probably get to that billion user mark soon. Now, the question is a billion weekly users enough to fend off all the competition? Especially because they're weekly, they're not monthly. Like, the fact that 900 million people come back every single week is pretty crazy. Will it make enough in 2026 to buy a box of tissues? Hopefully. Hopefully we're not needing that many tissues next year. Yes, I will be streaming the Fed decision and talk tomorrow. I'll be live at around 2:20, so 10 minutes before the Fed goes live. They go live at 2:30 p.m. Eastern. I'll be live at 2:20 p.m. Eastern. And we will get some reaction to these rate cuts. All right, let's get a little bit more analysis on this JOLTS data, and then we'll keep going from there and see what other headlines we have coming in.
From stores, from restaurants, all of that. So they have pre-Thanksgiving holiday shopping in yellow and Black Friday through Cyber Monday in blue, and they look at it by income group. And we've heard a lot about the K-shaped economy from companies and from executives, but here it is in the data that they are seeing in the actual spending. So if you look pre-Thanksgiving, clearly that trend was very much in place, where we saw, the dip in spending from the lower income cohort. It's continued throughout this holiday shopping season, where pre-Thanksgiving shopping and also Black Friday to Cyber Monday spending at the lower income has been soft or actually declining. Very different story if you make, for family household of more than $100,000. As you can see, strong growth there. And just some interesting tidbits from the data of where the growth is and where the spending is happening. Off-price department stores. TJ Maxx was cited as one. TJX. Discount and dollar stores, all three dollar stores were cited in that data, saw growth. Footwear up 4%. Active and athleisure was very strong. Some of the places that weren't seeing as much growth during this holiday spending were the luxury department stores. Think Neiman Marcus, Saks Fifth Avenue, the plus size stores like a Lane Bryant, which might speak to, the GLP-1 impact. That's been in long time decline over the last few months. So the spending is happening in, interestingly, cosmetics, footwear, athleisure. And again, at the high income, it really jives with what we heard from Walmart's CEO earlier on Squawk Box today, Doug McMillon joining, and he re-emphasized what they said on earnings, which is people with higher income levels are shopping with us more often and have been for a while, but there's pressure for those at the lower income levels. That's the story of the consumer right now.
It's been the ongoing story for a long time, hasn't it, Sarah? I mean, nothing's really changed.
It appears to be a little bit worse, you know, and especially during holiday spending where everyone sort of pulls out all the stops for spending. To see that gap is the first time I've really seen that. But look, cumulative impact of inflation. That's why the administration's talking about affordability right now, you know, and the fact that jobs aren't as plentiful. Ultimately, that's weighing on the down part of the market. Not Toll Brothers. Toll Brothers, I don't know if you saw in their results, but they were saying it's a plus because our fourth quarter results demonstrate that our luxury business is differentiated. We serve a more affluent customer who is less impacted by these affordability pressures.
But even they guided lower than the street was expecting on deliveries, and stocks down 3% today. Not off the opening lows actually, but it's going to take you back about a month or so.
Right, but I just
So September spending, or not September spending, Black Friday spending, as they're talking about in November, continues to be pretty strong. The problem is it continues to be strong potentially by one demographic in this country, which are upper and middle class consumers who are once again subsidizing all of the consumer spend. So this whole K-shaped economy thing that we've been talking about for a long time, I mean, a 2026 trend looks like that's going to continue. I don't see how that doesn't continue. I mean, the way it doesn't continue is if the upper end consumer stops spending, but I don't see the lower end consumer starting to pick up their spend, because obviously that's not easy to happen if you're not seeing massive wage growth, if you're not seeing massive job growth, and the labor market's not being that productive right now. So I think that K-shaped economy, if you're long the stock market, you've kind of got to believe that thesis will continue to play out, because if it doesn't, then some of these equity prices are not going to be able to be supported. But the retailer earnings that we saw last week and over the past couple of weeks going into Black Friday have been pretty strong, regardless of who is doing the spending. Google right there at 312, that's down about 0.36%. Then Meta, 657, still down 1.3% on the day. What's your opinion on Netflix, Amid? I'm staying out of this one. I mean, I thought there was something interesting to this story. I was interested when I thought they could legitimately buy Warner Brothers. Now I think it's just going to be a regulatory mess. And even if they do get it, I don't think there's any rush to buy Netflix. Like, first of all, it trades at a 45 times P. It's not like you're necessarily getting a cheap stock per se. Then number two, you have to ask yourself, is the quality of the business you're getting so phenomenal that you're willing to pay 40 times earnings, even if the acquisition takes a couple years to settle down? And I don't know if the answer to that question is yes. Primarily because, the reason Netflix got a premium early this year is because a lot of people thought we were going to go into a recession, especially during the tariff. Netflix actually was thriving during the Liberation Day stuff. It still took a hit, but one of the reasons it was up a lot is because soon after, is because it was viewed as a consumer defensive. And I think that narrative is starting to fade out. Like, people don't really care that you're not going to cancel your Netflix account. Like, that's not a premium that's added to the stock. So when it was at 120, it was really richly valued with that premium. I don't know if it gets that easily anymore. So, yeah, and again, even if they get Warner Brothers, then the question is how and when do they resolve all of this? I was reading some reports that says Netflix is just going to let HBO Max function independently, so it's not even going to bring the content onto Netflix's platform, which I think would be a disaster, because it would be annoying to have to switch back and forth, even though they're both owned by Netflix. So there's a lot of questions than answers, not to mention all the regulatory hurdles. So I don't know. I think maybe we had to do a little bit more deep diving to see if this is really a long going into 2026. Yeah, even Netflix is not even in a hurry. Well, we got to see if Netflix counteracts. I mean, imagine Paramount says, hey, we'll do $31 a share. Now we're definitively bigger than Netflix, even if you exclude the cable service. I mean, does Netflix come back and say, we'll do $32 a share? I mean, does it really just become a bidding war at that point? And I don't know if Netflix shareholders are gonna love if that happens either. Why is Uber falling? Uber at 90, that's down about 2%. Uber still had a good year. It was at 50 in the beginning of the year. It was at 80 a couple months ago, or a couple weeks ago. So this one is still having a decent recovery, $90.59. Dara was tweeting he's in Japan. Uber's signing a bunch of partnerships in Japan this morning as they continue to grow their presence in the region. AppLovin, amazing recovery right here. Look at that. from 520 to 711 in 2 weeks. The SEC probe is still there. I don't know if the market cares that much about it, but one of the better growth names. That's, AppLovin, I think, really shows you how much investors care about growth, because this is one of the best growth names in the entire market in the ad tech space. And even with an SEC probe and just getting their stock hammered down, the market wants growth and they're willing to pay a multiple for growth. And so, trading at 45 times sales, it's aggressive on AppLovin, but they're also growing at 77%. It's not many companies that are putting up that revenue growth. So makes sense that one's recovering. Tesla right there at 445, and then Palantir at 182. Amcor, we are still holding on to 43. It's down about 3% on the day, as that one's had a pretty big run. Wolfpack Research just said we are short SES. SES is a $731 million company, down 5%. I don't know what this company is, but Wolfpack Research just came out and said they're short. They said they have a series of phantom deals to distract from their two largest customers, which make up 74% of sales. This is not a massive short, most likely, but it is one of the ones that was announced today. Google Cloud was selected for Gemini in the government to serve as the first enterprise AI deployed on the U.S. Department of War's generative AI initiative from the CDAO. Okay, more bullish Google. Google Cloud getting put into the Department of War. The other thing that Trump announced yesterday was this one AI executive order to kind of basically unify all of the AI initiatives that the country is trying to navigate, which I think is bullish, because essentially you're trying to get rid of a lot of the bureaucracy that comes with models and innovating. I mean, right now you have California that has certain laws around AI, Texas that has certain laws around AI, and they can have those laws, but having a federal standard I don't think is a bad thing, so that a lot of companies can start fast tracking their progress in AI. And so you've got that from the Trump administration as well. Do you like Zeta? Yes, I like Zeta. I think it's cheap, it's undervalued. But again, Zeta is still a growth stock that the pressure is on them to keep growing. Now, they've executed very well back above 19, but they have any hiccups in 2026, the stock probably is going to take a hit. So $4 billion market cap. The biggest red flag you can point to is their stock-based comp, which is not that big a red flag. So I do like this one going into next year. Yes, we will be doing Technical Tuesday with Jason later today. Nvidia still flat on the day, 184.21. Yeah, let's pull up the heat map and see what we're looking at. It's kind of flat. I mean, I know things feel red, but it's not that red. I mean, you've got Google and Meta that are red. Broadcom's red. Broadcom has earnings on Thursday as well. That'll be a big one. Financials are up. Healthcare is up. That's what Ed Yardeni said to go long on as well, financials and healthcare. Again, I really respect him, but I really could not believe he says go underweight the Mag 7 next year, go long healthcare and financials. Do we really think that's going to be the trade? Do we really think Bank of America is going to outperform Amazon next year? I know it outperformed it this year. Does it outperform it 2 years in a row? In the age of robotics and margin efficiencies and everything, we're I don't know, dude. That's hard to imagine. Bank of America's had a great year. Are we expecting 2 years in a row of outperformance on financials and healthcare against tech? Again, some of these tech names didn't even have a good year. They've had a good decade, but they've not had a good year. Meta's up 9% year to date. Okay, underperforming the S&P. Amazon freaking up 3% year to date. Google's been the best one, obviously, but it's really an anomaly because nothing else has lived up to Google. Tesla, even year to date, if you bought at the lows on Tesla, you've doubled, but it's up 17%. Okay, basically matching the S&P. I don't know. I was very shocked to hear that from him. I really didn't expect that, especially because he's been so bullish on tech. So it's not like he's not been bullish on tech. I don't know if next year is the year you get not bearish, but underweight, given all the growth from the S&P is coming from tech. Speaking of tech, Europe is not really the happiest with some of our tech companies. So people probably have seen this chart. By the way, PayPal got downgraded again today from 74 to 67 by Wells Fargo. So PayPal continuously getting hit. Take a look at this chart that's been going pretty viral. The EU makes more from fines on US tech companies than from the tax of all public European companies. In 2024, the EU fined US tech companies 3.8 billion euros. Meanwhile, the public internet tech companies inside of Europe, which include Spotify, SAP, etc., paid only 3.2 billion in income tax. This comes after fining X like $400 million or something because they're upset at the blue check verification system. And Trump has been like saying that the EU is being ridiculous about this. And this was Trump yesterday when he was asked about what's going on with the EU.
Out by what your posture is and
No,
European.
they should be freaked out by what they're doing to their countries. They're destroying their countries.
Well,
And
European Council
and
President.
they're people I like. Look, they're people I like. I get along with them. You know that. But they can't let this happen. And it gets to a point where you can't really correct it. There'll be a point, and it's very close to that
And
point.
what will that mean?
It will mean that they're no longer going to be strong nations.
Does that mean they won't be allies
Or
anymore?
they'll be, well, it depends, it depends. They'll change their ideology, obviously, because the people coming in have a totally different ideology. But it's going to make them much weaker. They'll be much weaker, and they'll be much different.
And what will that mean for our relationship
look at
with
your mayor
them?
of London. He's a disaster. He's got a totally different ideology of what he's supposed to have. And he gets elected because so many people have come in. They vote for him now because, it's like, it's one of those things. But I hate what's happened to London, and I hate what's happened to Paris. I hate when I see it.
The weird thing about the Elon Musk X lawsuit from the EU is that one of the guys who's leading it has the blue check verification. And so he started tweeting at Elon about how the blue check verification, I'll see if I can find the tweet, but it was so weird. He was just like, this makes it hard to understand what's actually true or not on the platform. Mind you, he has the verification mark, so obviously he was a fan to pay for the verification. But they're suing Tesla, or not Tesla, X, for initiating an ability to pay to be verified, which, if anything, democratizes more than it isolates, because before it was this arbitrary group of people that worked at Twitter who decided who gets to be verified or not. Now you can pay for it, and you can verify like you're a real person because you have to literally submit a piece of ID to even have the ability to be verified. So I don't know, it's very weird, but you're getting more and more of these fines, which are not friendly to United States tech companies. And so this is where the tariff things become so important, because if the Supreme Court comes out and says, hey, we're going to reverse the tariffs, part of the reason Trump has been able to negotiate with the EU is by saying, hey, if you don't treat our tech companies correctly, then we're just going to increase the tariffs. If he loses that form of leverage, it could be an easier way for the EU to enforce some of these lawsuits on Meta and Google. Even Meta came out 2 days ago and said they're likely going to be using less user data for advertising inside of certain countries in the EU because of some of the fines that they've been getting, which potentially just means worse targeting for advertisers in the region, which potentially is bearish for Meta's revenue, but also it means a worse user experience, theoretically, for people that are using Facebook and Instagram in the region. And so we're gonna have to see, long-term how that also ends up playing out for a lot of these tech companies. NVIDIA right there at 184, AppLovin 715. The reason AppLovin is up, I'm seeing the headline right now, is agentic commerce. Their new e-com ad product was universally phenomenal, with some clients shifting from 40% to 80% on retargeting. They said this at a conference this morning. So AppLovin showing off that their actual AI initiatives inside of retargeting continues to work very well. 715, that's up 4% on the day. Silver still above 60 or breaking 60? Let's see. No, hasn't broke 60 yet. 59.62 for silver. Up 3% on the day. Very close to breaking that $60 level, which would be pretty massive psychologically for them as well. Let's get an update on Nvidia and what we've got going on with this H200 export control now being lifted for China.
Let's get right to Christina Partsenevelos, who's been covering this all morning. Hey, KP.
Hi, Carl. Like you said, President Trump approved specifically NVIDIA's H200 chip sales to China, with the U.S. government taking roughly a 25% stake of that revenue. But the upside may be limited. Why is that? There are three major challenges. First, margins could take a hit because U.S. government 25% fee actually reduces what NVIDIA would make from each China sale. Second, packaging capacity at Taiwan Semi, TSMC, is already tight. So it may be very difficult to increase that inventory for China. And then most critically, third, China could still block these imports as domestic alternatives really lag H200 performance by just to 12 to 18 months. But we know that Beijing wants China to focus on domestic alternatives. And then there's another little wrinkle too. The H200 uses HBM3E AI memory chips. So just think of it as just really advanced memory, which are currently restricted by the US government for sale to China. So it's still unclear if President Trump's approval also lifts restrictions on those particular memory chips, or if that requires separate regulatory changes. Once all of those hurdles are overcome, Wells Fargo sees an incremental about $25 to $30 billion, though, in annual China revenue. But there's still just a lot of uncertainty. Why you're not seeing a reaction in the stock? Many analysts, including Wedbush's Matt Bryson, say, quote, they're reluctant to really shift their models right now, which currently assume no revenue contribution from China. Even with President Trump's approval and maybe existing NVIDIA inventory for these H200s, the path to meaningful China revenue faces major roadblocks on margins, capacity, memory chip access, and most importantly, Beijing's acceptance. And Beijing may already be pushing back. The Financial Times is reporting Chinese regulators are considering restricting these H200 chips. Security concerns with NVIDIA's other H20 chips that are already geared towards China would still apply to these H200 since they're still the same family, the Hopper family. Beijing has also poured billions of dollars into domestic alternatives from Huawei to Capricorn. Bernstein expects China's local AI chip supply to grow 5 times larger by 2028. So Washington may have said yes, but China could still say no, guys.
Christina, when it comes to the H200, just in terms of comparing it to the H20, how much more powerful is it? How does it compete, if there's a way to even judge, with what what's available already from the likes of Huawei in China?
It depends on which research pack you'll use, but it's anywhere between 5 and 8 times more powerful than the H20. So the H200 is anywhere between 5 to 8 times more powerful than the H200, primarily because of the memory capacity on said chips. The H200 is the first chip to have high bandwidth memory 3E available in the NVIDIA family. Obviously, the Blackwell has that as well, but it's definitely a step up. It's definitely a step up, and we know Chinese companies would want access to it. We know that the Justice Department just blocked millions of dollars of chips that were illegally being exported to China. They removed the labels and put a fake label on there. So we know that there's still a lot of interest. But of course, China and every country and company around the world would rather get their hands on the most advanced version, which is Blackwell.
So again, China is trying to put up a image of, hey, we don't need your H200s because we'll do it with our own internal Huawei chips. That's just not reality. Like, they would love to have the H200s, and they probably will buy some of them. I just don't think they want to buy billions and billions of dollars worth of it, even if it would be effective for their researchers, because the perception is they don't want to be getting the worst type of chip in comparison to the US that gets to have the best chip, which is NVIDIA's Blackwell. So like net, the impact on NVIDIA should still be positive, because if you're going to be selling some chips, even if you're not selling $30 billion worth of chips next year to China, even if you're selling 5 or 4 billion, like, that's still bullish. But China coming out this morning and kind of denying that they want those chips, I think that's why NVIDIA is getting hit right here at 184.63. And by the way, if NVIDIA can sell their chips, AMD will be able to sell their last generation of chips as well. Maybe not the MI450, but That should still be accretive to AMD. CrowdStrike right there, 528. That's green. Robinhood really holding on today, 138. I mean, Bitcoin and ETH are holding on as well. Those candles have not faded. They tried to, but they have not really got hit. BMNR making a move up 1.19%. Even MicroStrategy back from 150 to 183 over the past week. When would you buy more SoFi? Honestly, I think it's now, right? Like realistically, I think the exciting dip buy on SoFi is below 25. We had that opportunity 2 weeks ago, which I didn't get at 23. Some of you guys probably got it, but we did see below 25 when everything was falling. I don't know if we easily see below 25 with fear and greed not being at extreme fear anymore. So then the question is, do you think they have an end of year run based on that rate cut? And if you think the rate cut is priced in and the market's not going to move that much, then maybe SoFi doesn't have a big run coming up. The reason the rate cuts are bullish for them is because, yes, their net interest income will go down because rates will come down, but the volume of refinancing activity that they should see should be massive. And so I think SoFi is an easy long into 2026. Like, I don't know if it's a double or anything, or if it makes like that crazy move, but I think this stock is closer to $40 by the end of 2026, at least closer to 35. And I don't think you have to lose too much sleep at night owning this one. Now, maybe there'll be some opportunity costs in the short term if other names are doing better, but I continue to hold all my SoFi. I'm not nervous of holding SoFi here. I just think that massive move that people have been waiting for has not happened yet. Now, again, Noto has a lot of incentives. If this thing gets to 45 for like 60 days by June, then he makes like $500 million or something. So he's definitely incentivized, even though we've seen more dilution to get the stock to go higher. Amazon goes green on the day, 227. Amazon trying to get back to 230, and then Nvidia at 185. Google at 312. When would you consider cutting Grab? I don't think, okay, so when I think of cutting a stock, and we were talking about this last night on the stream with the rapper, because he has like 120 positions. It's like kind of stupid how many positions he has. And so he was like, when would you get rid of a stock? I would get rid of a stock, if there's so little amount of money in it that it's minuscule. Like, if it's less than a certain amount of dollars relative to your portfolio, it doesn't matter. That's one reason. Number two is like, you don't know what the company does. You can't explain what the company does. So it's like, why do you own this stock? It's like, oh, you saw some commercial about it. It's like, okay, if you don't really have a thesis, you should probably get rid of it. And then three, if something in the fundamentals changed. Nothing has changed with Grab. Absolutely nothing. The fundamentals have only gotten better and better and better. So to me, I hate to make the comparison, but it reminds me of Hood when it was stuck at $7 for 2 years, or Palantir. I'm not saying it's going to make that type of a move, but we've had some names that have been stuck for a long time until the market recognized it. I don't know why the market's not recognizing right now. I didn't know in 2022 why the market wasn't recognizing Palantir after Karp was meeting with Zelensky. But still, Karp, first public CEO to meet with Zelensky, stock stuck at 650. Like, sometimes you really just don't know. So unless the fundamentals change, which I don't see the fundamentals changing in front of me, it's hard for me to cut bait. But I have to see if that plays out. No, I'm not rolling my option spreads either. I still think $10 by 2027 is possible. And remember, we don't have to get to 10. If we get closer to like 750, the options still are going to do very well. So as of now, I'm not rolling those. I think we got to let this play out over the next couple months and see, but I haven't got a fundamental thesis to change. And if I see it, then, I'll cut bait, but I'm not seeing that yet. And so, that would be my philosophical thesis on when to cut a stock. Now, if you hate the price action being stagnant, I understand that. That's totally a reasonable argument for why you want to get rid of a name, not just Grab, but any name that, PayPal's in this category as well. The question is, do you think the price action is stagnant and there is a non-fundamental story that is not matching up to the price action? Or do you think the fundamentals are so good that the price action being stagnant creates a really good opportunity? I mean, that's like the age-old question of how you hold a stock or not. And if you think there's a better opportunity, then, that's where you have to make a decision. Nebius right here, that one, 98.58, still down about 2% on the day. Did break 100 yesterday, 102. but that one's back down. Is Carvana overvalued? Honestly, I have never understood this business. I agree with Steve. It's a vending machine for cars. It's kind of crazy that they've had the success they've had, but the people that obviously saw something in this deserve the gains that they have. Never looked at the numbers. 127% year to date. They went to $350 in 2021, fell to $4, and since then they've 100x'd to 450. So I don't know enough about them, but I will not disrespect them because this is not a meme stock. You don't pull off 100x by being a meme stock. There's obviously something very strong in the growth story, and they've been able to, grow the way that they've been growing. Yes, I know it's a marketplace for buying and selling used cars. I just still didn't think that would be that much of a growth story to the street. But it's turned into one of the best growth stories we've seen in an entire past decade. Okay, well, the debt manipulation argument, that's Chanos's argument for why he was short Carvana, which I still think he's short Carvana. I mean, he got the MicroStrategy short correct this year. He got the Carvana short wrong. I don't know if he's still short, but I think in June he announced, or July, that he was short both of those names publicly. So one of those has blown up in his face, but yeah, his argument is they've completely cooked the books. I just don't understand how you can get into the S&P 500 and 100x your stock by cooking the books. That's why all these people screaming that Nvidia is cooking the books. It's like, no, they're not. Like, I hate to break it to you, but they're not cooking. You can't be under that level of scrutiny and quarter after quarter after quarter continue putting up these numbers, and it's all fake. Yes, we've seen that happen sometimes in history, but the idea that it's happening at the scale that it's happening for a company like Nvidia, it's hard to believe that. It's really hard to believe that. And you got a lot of these people bring up depreciation numbers as like their linchpin. It's like, these aren't even good arguments, and they don't even hold up when you actually listen to what the customers are saying about their GPUs. Gold right there, 13 cents away from getting to 60. 13 cents away from getting to 60. Yeah, if you're going to bring up Enron or Lehman Brothers, I mean, again, you're bringing up very, very cherry-picked scenarios where those companies were completely unethical and did it the wrong way. At that point, you're accusing Jensen Huang of being a fraud. I mean, that's what it is. You're accusing Jensen of being a fraud at that. And I disagree. I just fundamentally, I don't think Nvidia is a fraud. You're going to make an Enron comparison. It's like, okay, outside of the quantitative metrics not really lining up with Enron. I mean, compared to Nvidia, it just looks kind of stupid comparing the numbers. But then essentially it's a character argument you're making on Jensen. I just disagree. I keep saying gold. Sorry, I meant silver. Silver at 60. To be fair, Lehman wasn't a fraud, just dumb. That's also true. I watched The Big Short. I think I watched The Big Short for the 5th time. I watched it with my cousin because she's never watched it last week. I really do think that's one of the best movies of all time. I love that movie. I guess I'm a stock market guy, so it gets my attention. But yeah, I mean, when it happened, it was aggressive. And for us to have a 2008 type of crisis again that's being bolstered by Nvidia just seems unlikely. Bitcoin really making a move right here. Trying to get up to 92. That's helping Hoodie. That's helping Coinbase, MicroStrategy, Ethereum as well. Looks like that move from Jolts is not being faded yet. A lot of us thought it would be faded. Coinbase at 279, not getting faded yet. Maybe it continues to hold on. Clean Spark. Is that one going higher? Yep, Clean Spark's up 4.8%. That's holding up. Yes, I've seen Wall Street 1987. That was a great movie as well. The remake in 2010 sucked, even though they had some of the same characters, but the 1987 one was a legit movie. ASST, how's that one doing? Slightly green on the day. That's under $1. And then Bull, trying to get back up to $10, $9.85. I know this one's been a big retail name. That one's not really made an aggressive move either. Marvell, wow, Marvell down from 100. This one's also not in the S&P 500 yet, which I was surprised. I thought they were in the S&P, but they had a pretty strong earnings. This one could not make that move yet. Okay, let's get some more coverage on this Fed meeting. I'm going to put the official poll in the chat on if people think we're going to get the rate cut or not. And let's see what we think. Again, 89% is the Fed futures probability on us getting this rate cut.
I think they should cut. I think they will be hawkish in terms of the rhetoric following that cut in the press conference, and I don't think they should be. I think they should be very, very patient and allow for the official data to come through to see and lay bare exactly what's going on in the labor market. My strong suspicion is that the labor market is weaker than it looks under the surface. We'll get a lot of this information over the course of the first few weeks and couple months of 2026. And I do think that the Fed will ultimately embark on a deeper easing cycle than the market currently has.
So you see unemployment, the rate rising dramatically?
Not dramatically, but steadily and impactful enough so this becomes the A1 focus of the Fed. I think inflation will continue to migrate towards target probably by mid-late of next year, but I think the labor market is going to come into view much more sharply, and I think the Fed will be very, very keen to counteract negative pressures there very quickly, and we'll move into a more easing posture pretty soon into the new year.
Agree with everything you just said, but then we get a job openings report like this, which was very strong in terms of the amount of openings, or the weekly unemployment claims number, which is historically low and bodes pretty well, or job growth, which is still happening, even though we don't have the last few months of data. So it's kind of mixed messages.
Yeah, there's noise in the alternative data. There's noise in some of the official data, and none of this is going to be in a straight line because it never is. But I do strongly suspect that as we move into next year, some of the productivity gains that we'll see as a function of technology and AI adoption will really be felt. And as a result, that labor market weakness and labor market rebalancing that will need to take place will need to be assisted by meaningfully easier monetary policy.
Even if it means stubbornly high inflation?
I don't think inflation will be stubbornly high.
You think it's going to come down?
I think those productivity gains will allow the cost of goods sold to go down. I think that will be a net win for the consumer. I think it'll be a net win for margins. And so overall, to be clear, I'm actually really bullish growth in 2026.
Why?
So I think that the ongoing movement of the economic growth going in one direction, but the labor market going in another direction, I don't even think we've gotten started on how that move is going to develop.
High GDP, high unemployment rate.
High unemployment, requirement to move interest rates sharply lower than they are today. And I think it's going to be driven by the adoption of AI and other technological advances in the corporate sector. We're at the very, very early innings of it, but I'm more in the Elon Musk camp of this being a huge unlock of productivity, a huge benefit to the overall consumer and to the real economy. And by the way, like all of these things together, great growth, lower interest rates, terrific for the US government as we think about the fiscal balance as well.
That'd be nice. Are you using AI in your daily work?
Bits and pieces here and there.
Just bits and pieces. So you're talking bullishly about it, but you're not really using it much.
Yeah, because I don't think that the unlock of the value for the US economy is necessarily what we adopt. I think it's much broader in the real economy. We obviously are developing certain tools that I think over the course of the next 6-12 months are going to be much more impactful to all of our workflows. I'm using it, as said, in a limited fashion. There's others in the organization that are using it in a more meaningful fashion, but it's going to continue to develop and change the way that all of us go about our daily lives.
Yeah, no, I can't imagine that won't be the case. So getting back to your business, trying to sell bonds for investment grade.
Silver hit 60, 59.99, just touched 60 for a second. And Bitcoin and ETH are running. All right, so I guess the commodities and the digital commodities, Bitcoin at 92, are liking either the JOLTS data or the anticipation of a rate cut. BM&R, Hood, MicroStrategy, Coinbase, all benefiting. BM&R up 3% of the day as we are seeing these catch a bid this morning.
Rated companies. What are your expectations for next year? I mean, you see a deal in my world, you know, Netflix, obviously, huge bridge facilities. They'll get taken out at some point, potentially by by the bond market as well. Is that your expectation for 2026 as we continue to see potentially a lot of M&A?
Yeah, so I think that M&A and CapEx will continue to be the big drivers of IG financing around the world. And so we'll close the year in the US around 1.8 trillion of financing done. We'll be north of 2 trillion over the course of 2026. We've had roughly $140 billion of M&A related financing in the US this year. As you look forward over the next 12 months from what's being publicly announced and what's either been bridged or companies have stated their intention to use debt financing markets, there's already 140 billion there. And that's before the other announcements that we'll get in the coming weeks and months, much of which will find its way into the bond market next year. So that number will be north of $200 billion, and it could eclipse the records that we've seen for acquisition financing. And from a CapEx perspective, you've seen $140 billion of hyperscaler financing in 2025. That was about $25 billion the year before, and 80% of that volume has happened since Labor Day. That's clearly going to be a much bigger number. It could be a double over the course of next year. You put those pieces together, that's a very clear path to a 2 trillion plus number.
Wow.
I mean, it's not a crazy thesis. It is similar to what Oppenheimer said yesterday. 8,100 is their target. They expect the Fed to cut. They expect earnings to be strong. And they are assuming a 26.5 forward projected multiple on the S&P 500 at $305 a share. 26.5 times gets you to 8,100 by the end of 2026. Again, we look at a lot of data on this show every morning. And while there have been bearish things that we cannot avoid looking at, the trend is still AI trade, Fed easing. Now, if that creates an asset bubble is a different question. But will it create excitement for capital to be put into more risk on plays that ultimately need to grow to show return to investors? Yeah, I think it sets up that framework going into 2026. Which, whether you like it or hate it, it does feel like that could play out. Ethereum right there at 3,200, Bitcoin at 92,000, silver still moving. Gold still moving. MicroStrategy and BMNR both. Strategy up 2% on the day. Hoodie, are we past 138? We are at 137. SoFi still down 1.3. Nvidia still down. Amcor back at 44, and then the S&P basically flat on the day. So realistically, it's Bitcoin, Ethereum, gold, and silver that are moving the most today. Iran's getting a little bit of a pump right here. Their dilution is now done. I mean, I think we talked about this last week. The dilution, even when the news came out, was not a big deal. Like, these are capital-intensive businesses if you're going to enter and become a neo cloud. And so it shouldn't be a surprise when they have to issue convertible notes. So this one getting closer to 50 seems reasonable, given they pretty much told the street they were going to do what they did. They did it. The street got upset. And now the street isn't that upset. CleanSpark, that's up 7% on the day. And then Carvana, still up 2% on the day. APLD, yeah, the data center plays continuing to move, up 4.5%. Chad says, I'll take a nice big sell-off after I get my Christmas bonus. Yeah, I mean, look, January is a mixed bag sometimes. January tends to be really good in certain sectors like small caps, but it also tends to be bad in names that have had massive gains in the year before because people don't want to sell at the end of the year because they don't want to pay their taxes, but they don't want to be obligated to pay the taxes into the following year. So they sell the year after, or the month after, which is January, and they delay some of their taxes. So I think my biggest fear for January was another shutdown. Given some of the stuff Trump has been saying about healthcare, I think we avoid the shutdown in January. I think the Democrats and Republicans come to some level of agreement on what ACA subsidies will look like. And I think that sets up a much better chance of the first half of 2026 being better than expected. Bitcoin really making a move right here, 92.5, trying to get up to 93. But that was my deeper concern going into going into January. 7B, thanks for the super chat. Thoughts on Redwire? Feels like the purest picks and selfish play on orbital data centers plus broader space infra boom. Any favorite ODC names? You know, Redwire is a name that Jason has also liked for a while. I have not done a big deep dive into their financials. I actually visited one of their suppliers in California with Jason because he has a buddy that works for a couple of these companies. He's like works at a vendor that contracts with Rocket Lab and Redwire. And they were pretty bullish on Redwire as well. I think when it comes to like data centers in space, right now it's an idea that everyone's been talking about. It's not really material. Now, do I think it will become material? Yes, because I think you have too many smart people talking, like Sundar and Jensen and Bezos and Elon, obviously, that it can become real. I think it might be a little early to try to get exposure to it when data centers in the US haven't even gotten close to being fully built out. So I definitely do think there's potential there, but not sure if Redwire as a play just for the picks and shovels from that perspective is the best opportunity here. But I have to look at their financials. I mean, $1 billion market cap. I don't even know how much revenue these guys do. So I'd have to go deeper to see that. Bitcoin really trying to make a move back to 93. Really trying to make a move back to 93. Same thing with Ethereum. When's the last time we saw 3250? Well, no, it's the highest it's been since November 15th. We kind of got close to that on December 3rd, but weren't able to really get back to those levels. So almost the highest has been in a month is what we're seeing on ETH. Someone just sold 10 million worth of puts on Nvidia at 187 for January 16th, 2026. Okay, so you got some out of the money puts being sold on Nvidia for about a month out. Why is Duolingo pumping? I don't know, but please keep pumping because I need my stock draft to have Duolingo recover. Okay, now we're only down 55% on Duolingo. There you go. I mean, look, I don't know why it's pumping, but this thing, did it deserve to be at 150? Like down from 570? At some point, this thing needed to make a reversal. So we're up 32%. Matt's at 25. Tanner's at 21. Steve's at 5. And then Chris is at 6. That's what we have on the stock draft. Amit, I think you're the only one following the stock draft. Does no one else care that we did this thing? We made a whole big stream out of it, made it such a big deal. I guess we got to do a 2026 one as well. Joseph Carlson sold 10 million of puts on Duolingo. Oh my gosh. Dude, he really wants Netflix to win this freaking Paramount or the Warner Brothers deal. And I understand. First of all, for those that don't know, Carlson's been long Netflix since like $10. Or since before that, but when it fell to 10 back in 2022, he really doubled down. And, stock is 10x since then. So he deserves all the praise for that. But he believes, and I think he rightfully knows as a Netflix shareholder, this is a once-in-a-lifetime opportunity. There's not many times you get to buy Harry Potter. Like, there's just not many times it goes for sale. So if you're a Netflix bull, you really want this to work out. And if you're just sitting on the sidelines, you get the time to wait and see if they can actually make this accretive. But I can understand why he wants this to become a thing. I think we might do the 2026 draft on New Year's Eve, to be honest. We might do something like that. We're going to see. We got to see if we can get everybody together. But we might do something like that. Hood still at 138. APLD going up to 34. A lot of the data center plays still moving. Yeah, look at that, 33.94. Up 6%. Crypto still moving as well. Silver at 60. That's not stopping. SMCI, I don't know why these guys haven't moved, especially with Dell. I mean, I know their guidance wasn't amazing, but I mean, we need a lot of servers for these GPUs, so I'm not sure why that one hasn't made that big of a move, but I guess the lack of quarterly guidance versus their fiscal year guidance is what kind of scared the street. Maybe the street kind of just rotated that money outside of some of the server plays. I ran right there, trying to push 49. That's up 3.6. And then MicroStrategy at 188. Dead cat bounce happening. I think this week is going to be interesting, dude, because like yesterday was kind of flat And then Nvidia news after hours made it green. Then pre-markets were red. Now we're kind of green. A lot of this depends on the Fed, but as a lot of you guys voted in the chat, who voted for a 25 basis point hike? Like what 3% of people voted for a hike? But if we do get a hike, there's definitely a dead cat bounce. But even if we don't get a hike, if we get a cut, I wonder if it's going to be enough to make us move forward. I put that in there just to see if anyone would vote on it. I guess some people thought we would. Could you imagine if Jay Powell comes out and is like, guys, inflation is the issue. I don't know what you guys have been talking about, but inflation is a concern. What the hell are you guys thinking? We were going to cut? And then boom. That would definitely be some coal underneath the Christmas tree. Trump just tweeted. Well, he didn't just tweet, but this is the latest tweet. Because of tariffs easily and quickly applied, our national security has been greatly enhanced, and we have become financially the strongest country by far. Anywhere in the world, only dark and sinister forces would want to see that end. Again, it looks like he is gearing up for the Supreme Court to give him a pretty ugly decision on tariffs. I don't know how the market's going to react to it, dude. I think the market's going to like that the tariffs are unconstitutional, but I also think the markets might feel it's a bit chaotic if we have to reverse some of these tariffs. So I genuinely am not sure how this is going to play out. Trump would go crazy. Yeah, dude. I don't even want to imagine Trump's reaction if we actually get a rate hike. I wonder how fast the stock market would fall. Like if literally no one's expecting it and Jay Powell says hike, I wonder how the velocity and magnitude of a fall would be, because we know it's going downhill. That's not going to happen, but if it did, it would be pretty crazy. I think we should get Supreme Court decision in the next week. It should be happening very soon, if not by the end of the month, but more likely than not, we should be getting it soon. 5% in a day, yeah, I don't doubt that, which means individual stocks would be like 20%, especially the high beta names. Tomorrow we'll find out. Tomorrow we're actually going to see how the Fed is thinking of this. We have that SpaceX secondary sale value the company potentially at $800 billion. Here's a little bit of an update on Elon and his personal wealth as per SpaceX.
Well, according to reports, SpaceX is planning that secondary share sale that would value the private company at $800 billion. So Elon's stake would be worth over $320 billion. That assumes that 40% ownership in SpaceX has not changed. Meanwhile, his direct shares in Tesla are worth about $182 billion. So even if you add in the options from that disputed pay package back in 2018, his Tesla wealth is being far outpaced right now by SpaceX. Now, if the SpaceX deal goes through, it would bring his total net worth to over $620 billion. That would make him the first person ever to reach the $600 billion mark. You might remember he was the first to reach $400 billion last year and the first to reach $500 billion back in October. The rising values of those private companies, including XAI, they were cited by the Tesla board as a concern and reasons for awarding Musk that pay package that could potentially be worth $1 trillion. The Tesla proxy saying, quote, because of a majority of Musk's wealth is now derived from other business ventures, the compensation was needed to, quote, prevent him from prioritizing those other companies. Tesla shares down, of course, 3% yesterday.
Yeah.
You either see $628 billion for Elon and you get spiteful, you get jealous, you think no one should have that amount of wealth, or you see it and you're like, wow, for one person to accumulate that type of wealth, Bitcoin really pushing for 93, it means they had to do some pretty important shit in life. There you go, 93 on Bitcoin. Wow, this Jolt move, if we want to call it a Jolt move, BMNR up 5, Hoodie up 2, MicroStrategy up 3, Coinbase up 4. I don't know if it's a Jolts move, but maybe it's a Jolts move. You're either super excited to see someone worth that much because they've created so much, or you hate to see someone have that much wealth, but it's quite incredible. I am more on the side of the former rather than the latter. I mean, the number is mind-boggling, one person being worth that much, but also it's like, well, if you built companies that end up getting valued like that because other people are willing to invest and they believe in that valuation and you own a significant percentage, like, yeah, your net worth goes up as a result of that. And, he's made a lot of money for the people that have been on the ride with him. Bitcoin right there, 93. Hoodie's really, if she goes back to 140, dude, I mean, that would be quite impressive. This thing went from 150 down to 100. If she actually makes her run back to 140 and holds it, that'd be very nice to see. Bitmine right there, that's up 5.78%. Bitmine hasn't been at 40 in basically a month. And then Coinbase was at 400 before it fell. Now it's at 283. Up 3.2%. We did a poll a couple of days ago, I think last week, and the majority of you said Bitcoin will hit 100K before the end of the year. So, I mean, maybe HUD to 150, maybe MicroStrategy back to 200. I mean, that stuff is very possible if we get that 100K. Did Nvidia go green? Wow, Nvidia's going green. Dude, what is this movement? Because I don't want to say Jolts was the $1,000 Bitcoin candle. I mean, like as soon as the Jolts number came out, the candle went up. But I don't think Jolts actually matters that much for crypto. So it feels like whatever happened at that moment, maybe the crypto markets are using Jolts as an excuse to go higher. It looks like they wanted to rip. The market literally jolted, yes. It's the October clarity from Jolts. That's fair. And October jobs did beat expectations by like 10,000, so that's fair. Maybe that was enough to get the risk-on market more excited. HIM's right there, just below 40. Galaxy, 9% on the day. Shout out to Devin Ryan. Hell of a day to initiate coverage yesterday on this bad boy. CleanSpark as well. Massive move. CoreWeave also diluted yesterday. Street kind of moved on from it. 87. That's up 1% as well on the day. Sergio, thank you for the super chat. Thank you, man, for showing up today, especially being under the weather. Sending you healing vibes your way. Appreciate it, Sergio. Thank you for being here. I really did not want to miss 2 days in a row. I feel like you can miss one day, but missing 2 days is unacceptable. So, yeah, I'm happy we were able to still be here. And again, thank you to everyone who reached out yesterday and said to feel better. I really thought when I went to sleep Sunday, I'd be like, I'll be good by the morning. And then I woke up and I was like, dude, I'm not good. Like, there's just no way I can go live. So I really, really do appreciate everyone that reached out. I know a lot of people were like, dude, the market can't open if I don't hear the bell. Like, what's going on? Like, how am I supposed to? And I get it. It's part of my routine as well. It was weird at 9:30. I was looking at my phone and I was just like, I should be ringing a bell right now. But the show must go on. The show must go on. Carvana right there, 453, still up 1.2. Even Grab going green. Look at that. Even Grab getting a little bit of green today. Zeta still moving higher. And then Google going green. All right, Amazon going green. Nebius very close to 100. The Qs just went green. S&P's green. Meta still down. Meta not really getting a bounce. But a lot of these other names going green. Can we see a doctor's note? Dude, that's what it felt like. It felt like I need to like submit a doctor's note to prove that I'm like actually sick. And then like a lot of people didn't see the YouTube community post. So it's just like all these messages on X, like, hey, like, where are you? What's going on? Where are you? And it's like, how do you tell everyone you're sick, you know? But nonetheless, it is what it is. I hope I don't actually get sick. Like, again, yesterday was a little bit of a cold. It's like, it's hard to talk. So it's like, all right, we'll take a day off. But like, if I got the flu or something, which I think the last time I got the flu was back in like 2018. It's been a long time. I mean, I had COVID after that, but like, I haven't gotten sick in a minute. And when that happens, that's like a minimum of 3-4 days you'd be out. So hopefully we can stay okay. Yeah, Neil did message me. Neil did me. He said, what did he say? He said the Emit refugees ended up going to his stream. Yeah, Neil's a good guy. Me and Neil will be live probably with Jose tomorrow for Oracle. So we'll be streaming all of that. You should just come on for 1 minute to ring the bell when sick. That's not a horrible idea. I'll ring it for that 1 minute and then keep going. My wife hates me waking up and listening to you before I talk to her. Dude, there was a couple people that messaged me that. One guy was like, dude, my wife was like, where's the good morning guy? Where is he? That's so funny. It's a thing, right? When you have a routine, you have a routine. It's the same thing for me. Like when a content creator I constantly listen to doesn't post, it's like it messes up your routine, especially if it's part of your day. S&P 684, Coinbase 283, Duolingo even moving today. I'm trying to see if there's a better headline right now on why exactly we flipped green. It could just be the algos, 11 o'clock algos, 10:30 slam didn't happen today. Is that it? Rate cut probability still high. I mean, maybe it's Kathy. Let's see what Kathy has to say. Maybe she's getting the market bulled up.
It's risk on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent, and I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago. Now, gold is more of a risk-off asset, and that its rise, we think, is proof that we are climbing a wall of worry. Investors are using gold as a hedge against geopolitical risk, and yet, if you look at what happened from the early 80s to the late 90s, gold went down as we were in the golden age for innovation, ending with the internet. We think the same could happen now, and that Bitcoin will remain a risk on and re-engage, and this fear of AI hype will, I think it's good. As an investor, I'm happy that people are worried, but I think we will continue to lean into that because we've really just begun the AI age.
And you're poised to increase holdings and exposure to your Bitcoin ETF, right?
Yeah. Oh, well, Bitcoin ETF is ARKB is passive. So the more that investors want to participate in this new asset class through ARKB and other spot Bitcoin ETFs.
So Kathy continues to be bullish Bitcoin. I mean, you've got a lot of 93,000 right here. You've got a lot of inflows that haven't really stopped coming in. November was where you had more outflows for Bitcoin, a lot more inflows for gold. A little bit of a reversal, at least in the first couple of days of December, as Bitcoin continuing to make a move right here. And you're seeing that momentum right now. Vlad did an AMA yesterday, and someone asked him, our boy Juan, do you plan to expand into Latin America? Vlad said, eventually I want to expand everywhere. It's just a matter of when. I really do think Hood's going to $1 trillion. I know I sound like a super crazy euphoric bull when I say that, but I've been saying that for the past couple months now. Like, seems inevitable. It's not going to happen soon. It's going to take time. It's going to be a bumpy ride. Probably a bit expensive right now in the stock. But these guys have such a massive opportunity. Like, it's going to happen. And there's so many. And that podcast on the compound just made me even more bullish, as Vlad was talking about the different verticals that they're expanding to. I mean, dude, they're eventually going to get into like all these different ancillary things that we don't even think about. Wow, Bitcoin really continuing to pump. 93.4. 93.4. When's the last time we saw 94? Last time we saw 94, November 14th. And that's when it was declining from 106 on November 10th. It's been a month. It's been a month since we've seen it. But yeah, I just think there's so many verticals for them to expand into. I mean, they haven't even got into lending yet. Lending is a many multi-trillion-dollar market that they're going to be tacking head on. Hood right there, 138.79. Duolingo's up. UNH still doing okay, 324. Oscar 17. And then Lemonade. Lemonade's had a great year, had a massive earnings, pumped like 40%. It's held on to its gains. So if you're in Lemonade, you've seen a lot of excitement on that one as well. 77.92. December 3rd. Really? We hit 94 on December 3rd? December 3rd? You guys are probably right. December 3rd. Okay, it was a very quick 94. We hit 94.1. Okay, so outside of December 3rd, last time we hit it was November 15th. 95, I guess you could say, is back in November. So a run to 95 would be exciting. Applied Digital breaking through 34, up 7% on the day. Micron's been getting a hit over the past couple of weeks. Wait, is it back at all-time highs already? Yeah, it's basically right. 260 is all-time highs at 255. It got hit last week and the week before. Fell to like 235. Look at that. What a recovery on Micron. You know the guy who's bullish on Micron, Josh Wolf, who runs Lux Capital. I was listening to a podcast and he was talking about HBM and memory. I mean, they've been long Micron for a while, but they love Nvidia, they love the semiconductor trade, but Micron was really where they thought there was going to be a shortage of supply, which would increase the pricing power for a lot of these memory companies. And boy, did they nail that thesis. Micron just absolutely crushed it. By the way, our boy Chase Coleman from Tiger Global, they're raising another $3 billion VC fund. And the goal of the fund, as per the memo, is to double down on their AI investments. So they're not trying to find new companies. They're trying to double down on like the current AI stocks they're already investing in and continue to, prove that those names deserve more capital as those companies are in massive growth phases. By the way, speaking of these VC names, a company called Unconventional AI raised $475 million yesterday in a seed round, not Series A, not Series B, seed round, valuing themselves at $4.5 billion. Now, you might be asking yourself, what does Unconventional AI do? They build chips. They're an Nvidia competitor. So the interesting takeaway for this was not necessarily if the startup is going to be super successful or not. I mean, time will tell. The valuation obviously is aggressive at that seed stage, but obviously if you're going to be building hardware, you're going to need to raise a lot of money. What's more interesting to me is that you've got everyone saying NVIDIA is a bubble and that chips are a bubble and they're like, oh, this is going to slow down. And then you have literal seed-funded startups that are getting a $5 billion valuation to build competitive chips because A, the market is so massive that they feel they have a shot to compete with NVIDIA in terms of selling chips. B, they think they can make better chips than NVIDIA. Now, will they? Who knows? But even if they kind of make chips that are relatively as strong as NVIDIA or even 20% as strong as NVIDIA, there's probably going to be a market to sell it into because the demand is so strong for these chips. Yeah, they're building analog chips to challenge digital. Exactly. They did a whole podcast. I'll link it right here with A16Z. So, I mean, you've got the Michael Burrys of the world just screaming about bubble and how everything's fake. Now he's asking, he tweeted that he wants pictures of the GPUs in the data centers to prove that they're actually there. I think the guy is kind of losing it, bro. I really think my psychoanalytical analysis of why Burry is going through all of this is actually the right analysis. I don't think it has anything to do with AI bubble. I think he wants to be the guy like he was in 2008. He wants to feel like he did 17 years ago. S&P high of day at 685. And I think he's kind of crashing out at this point. I listened to the interview with Michael Lewis. I don't think he said anything interesting. Did anyone in that podcast hear anything interesting that he said? It's the same arguments that he's been making on his Twitter about why he thinks AI is fake. And look, eventually, will there be some bust to all of this spending? Like, yeah, probably. Will it happen in the next 2 years? Like if it happens in 2033, does Burry get to be right? Like, no. Like, I think you have like a 2-year time frame, right? He initiated the short in 2005. By 2007, the housing market crashed. Okay, he gets the credit for it. If we don't crash by 2028, like, does this guy deserve the credit for? I mean, like, I don't know. I think at some point we'll probably get an acid bubble. Rates probably get too low. Like, you probably start to see things get euphoric and overvalued. And hopefully, unlike 2021, a lot of us will be able to see that happening, although it's going to be really hard. But the point is, like, if it doesn't happen in the next year or two, then I don't know if he deserves to get the credit on that. Nvidia still trying to push to go green, and then Hoodie really pushing for 140. Really pushing for 140 right here. 139.67 on Hoodie. Iran as well, up 5% on the day. I also think all these neoclouds that are buying these GPUs, acquiring all this land to build out these data centers, again, is all of that fake? You could hate the business model of the neoclouds. That's totally fine. You could say that the business model results in too much debt and dilution, not enough ROI on the CapEx. That's totally fine. But I don't think you can necessarily say it's all fake. It's just hard to make that argument. BMNR, wow, 30, almost 39. Last time we saw this was legitimately November 12th. And then last time we saw 40 was November 10th. So it's been a minute even getting close to that $40 level for BMNR. Circle up on the day as well. This crypto getting some love. Circle 88.80 on the day. Small caps also getting all-time highs. Wow. What a Tuesday. If the S&P can catch up, we're going to see all-time highs across the entire market. ETH above 3,300. Look at that. Well, very close to 3,300. Did we touch it? Yeah, we touched it for a second. We touched 3,302. Yeah, old is green and Nvidia is still red. Just goes to show how afraid the market still is of this whole bubble conversation. Now, this could be setting us up for a ugly rug pull tomorrow. If every time what's his name, Powell announces everything, by 3:30 we see the real price action. So 3:30 to 4 is when the price action takes place, and that's when we get to know what happens. The meeting usually ends by around 3:30. So could it be setting us up for a rug pull? Maybe. I mean, it's look, the mainstream reaction that I've heard from the talking heads is that it is going to be a hawkish cut, which I don't think they're going to be wrong about. Like, it's probably going to be a cut with a mix of, hey, like, don't expect us to cut anytime soon because we're measuring inflation, labor, basically the same thing it did last time. But even with that, given the seasonal aspect of where we're going into the end of the year, along with the fact that the market's been begging for this cut, I still think there's a world where we can get potentially that start to a Santa Claus rally. Speaking of that Santa rally, take a look at this. When the Fed cuts interest rates within 2% of the stock market all-time highs, which is where we are right now, the S&P 500 has gone on to finish higher over the next 12 months, 20 out of 20 times for an average gain of 14%. So on average, if we're within 2% of the all-time high and the Fed ends up cutting, the S&P is up 14% the next year, which would put us basically around that 7,900 range. I mean, maybe that's where we end up going into 2026. Yeah, maybe Santa's actually coming to town. It would be fun, right? Like, before Thanksgiving, we got a little bit of a pump, made Thanksgiving a little bit more fun. We got a few more weeks till Christmas, but maybe we get that pump coming in. But we got to hold this, though. We got to really hold this. This is the first time in a while we've seen like everything, including silver and gold, part of that everything rally thesis. Wow, silver 60.27. That's up 4%. It hit 60.40, and then gold still moving. MicroStrategy up 5% as well. Why does BM&R keep dropping randomly by $2? Remember, Tom Lee's probably issuing shares when you get a mean breakout, which is the whole function of the business model, right? So it's hard for it to really break out unless Ethereum breaks out. But if you get a slight breakout, that's where you get the decrease, because that's when they dilute to raise money to then buy ETH. So to see a monster breakout, that just takes a lot more ETH momentum. Why did Meta dump? I think it's that Google Glasses headline competing with Meta, but the more I think about it, the more I'm like, that's a really stupid reason for it to dump. 655 right here. I don't know. The glasses shouldn't be the thing. Maybe their avocado model the street's upset about, but the street should want them to be spending CapEx on something they can get a return on. Having a model to compete with GPT and Gemini seems like at least some reason to spend on CapEx. So yeah, Meta just could be a gap fill as well. That's very fair. That could also be happening. Applied Digital up 9%. That's correct. CleanSpark making its move. A lot of these data center plays getting some love. I have not heard about the Rocket Lab Half-Life 3 conspiracy that is going on the internet. Thank you for the super chat, but I've not heard about any conspiracy that has to do with that and Rocket Lab. I'll look into it today, but I have not heard about it. Trump issues executive order on food supply chain, now published in the Federal Register. You do have Trump saying that he wants to pay the farmers through an executive order with about $12 billion, given that the farmers have been gutted over the past couple of months because of the tariffs, unfortunately. So also be something that we're going to see. Avocado means dip. Yeah, maybe that's why. We got Jack Mahler's live. Let's see what he has to say around Cantor Equity Partners and the overall crypto trade.
Opportunities in brokerage, exchange, credit, and lending. I mean, to us, the opportunities are endless. Again, this is something we've been doing for over a decade, is producing high value products, high margin, high growth, cash flow, and the ability to pair it with a large treasury in the capital markets. We want to give the capital markets both blue chip credibility and startup upside and an ability to contribute and participate in Bitcoin's story. We think that the markets are going to really love that.
So you want to do brokerage like Coinbase, but strictly Bitcoin?
Yeah, listen, these things we'll come out with them sooner rather than later. I'm not committing to any timelines today, but we're really interested in building credit markets on top of Bitcoin, lending products on top of Bitcoin. It's a $2 trillion asset that needs credit and lending and capital behind it. There's nobody better than partners like Tether and SoftBank. And then our experience in the brokerage and trading space, we think that there's evergreen opportunity. And really the thing is, our tagline is a Bitcoin company. We're not a stablecoin company. We're not a crypto company. We're not a prediction market company. We see Bitcoin as the forest through the trees. It is the opportunity, and no one's seemingly focused on it. And that's the story of this equity, is to focus solely on Bitcoin, deliver value to shareholders through primarily Bitcoin.
Who should buy your stock? Why wouldn't they just buy Bitcoin then?
Well, because they don't have Tether, SoftBank, and the cash flows that we'll produce. So, I agree with that. We do not want the market to think of us and price us as just a treasury asset. That is not us at all. We're going to acquire as much Bitcoin as we possibly can. I mean, I think it's crazy that we own over 4 times the amount of Bitcoin Coinbase does. And this is my first day in the public markets. But, we also want to build massive businesses. And
I do agree with that. For as bullish as Coinbase is on Bitcoin, for them to not own it or own a significant amount of it on their balance sheet is a bit weird. And I get they're an exchange, but they're strictly a crypto exchange. You would think they would have been putting it on their balance sheet for like the past decade. And they really don't have a sizable position in Bitcoin, even though they're a crypto company.
I think the markets will appreciate, Tether's no slouch to that.
Has the recent volatility been jarring to you, or is this like just par for the course?
No,
much worse.
Par for the course.
Yeah.
Come on, man. Yeah, of course. I mean, listen, to own the best performer in the face of currency debasement, in this new, fiat era regime of infinite amounts of deficits in printing. Bitcoin is priced on the future expectation of fiat currency. And it's a wild world that we're living through and having to go through. And so you eat some of the volatility to be the best performer. If you can't take the heat, stay out of the kitchen. and so, Bitcoin's a winner, and I have no problem riding this ride. And neither does the leadership team, the board, we've been here.
Right. What do you make of like long-term sort of game theory ideas like productivity through AI allows you to handle your debt, or quantum comes along one day and knocks out a whole tranche of Bitcoin encryption, things like that?
Sure. Well, quantum as a threat to Bitcoin, that's not a real threat in our opinion. Listen, the coolest part about Bitcoin.
December CPI coming out January 13th. Wow. The BLS delayed CPI till January. That's a month after the FOMC meeting. I wonder if they delayed the November jobs report now as well. That's supposed to be coming out December 16th. Hopefully that's not delayed. But CPI for December will be out later.
It's not a rock that we found in the ground like gold. It's software. We can change it. We can make it better. The coolest part is we're going to make Bitcoin better for the rest of our lives. Bitcoin's going to be getting better long before I'm gone, or long after I'm gone, excuse me. And so Bitcoin can get updated, and it has throughout its life. Quantum is not a near-term threat, and it's something that the community and the engineers can address. It's not a problem whatsoever. And the other point on deflation, listen, AI is so empowering, brings so much efficiencies, such deflationary impact to the market. And, fiat is a very inflationary system. It needs more money printing. It needs more debt to survive. So AI is very disruptive to a world that's built on debt and future fiat printing. To a deflationary asset that no one can print, AI is beautiful. It's incredible. And I think Bitcoin is going to be the winner of this AI era.
I have heard more people talking about whether quantum can break the blockchain.
Sure.
And how developers in Bitcoin have to get ahead of that. But here's my question. How long have you been in the market? How did you get started in this?
My dad is standing somewhere over here. I dropped out of college 13 years ago, and I got in with my dad. But I've been in Bitcoin 13 years. I'm the founder and CEO of Strike, and now co-founder and CEO of 21. And Bitcoin's all I've known since I'm 31. So I've been Bitcoin since I was a legal adult, 18.
Yeah, not bad. I mean,
No.
Bitcoin doesn't have a much longer life than that.
No.
But what about Tether? When did that combination come in?
Well, like I said earlier, there are not too many people at the Bitcoin meetup sharing pizza in a keg 13 years ago. And so Tether has been immensely innovative and a crucial part of Bitcoin's story. And so we've known each other for a very long time. I mean, things like making Bitcoin payments faster and cheaper, the El Salvador story. I was a major piece of that, and Tether now as well. And so it's, we're friendly. We share a very similar worldview. We think of this technology as the most empowering tool that we have access to make humanity more prosperous and push for a vision that we fundamentally believe in. And so inevitably we were going to co-found something, and this opportunity deeply inspired us. We think we can bring something unique and different to the capital markets.
All right, well, that's what we got from Mr. Jack Mallers. Bitcoin's still holding on. I think that is it for today. We'll be back on the close. Ethereum just under 3,300. Bitcoin, if we can make that move into 94, that'd be very bullish. Hoodie still holding on to 139. Iren's up 5%. Circle's up 5%. Small caps, all-time highs. S&P trying to crack 685. Honestly, Nvidia is one of the only things that's red. Everything else moving pretty hard. Amazon even moving. Google moving back to green. Amcor almost green. Grab green. Palantir green. Tesla green. Oracle green. Rocket Lab, HIMS. Rocket Lab trying to go for 52. Seeing a lot of these names either begin to get excited for the FOMC meeting tomorrow, which will be followed with Oracle and Adobe. So there's going to be massive earnings. Or the JOLTS data was good enough to get them excited, and that's where we're seeing some of this green momentum. All right. Not too bad. Not too bad. I'll be back on the market close. I'll be here with Jason. We will get into Technical Tuesday. We don't have any earnings today. I mean, we have GameStop, so we'll see the results. But outside of that, we'll get into the technicals and see what we've got going on from there. Word of the day. This one's an easier word, a bit more basic, but always good to review the basics. Theta, the rate at which an option loses value as time passes, the silent tax of the options market. Selling covered calls prints steady theta while everyone else bleeds it. So again, if you are selling an option, theta is your friend. You want an option to continue losing value because then it goes in your favor. If you're buying options, theta is not necessarily your enemy, but it's something that's working against you, and you need to have time on your side in order to reach the strike price that's needed for the option to actually meaningfully print. That is our word of the day. All right, that's it, folks. I'll be back on the close. Again, thank you, everybody, for being here. We'll have a lot of updates this Friday. We'll have a new stream with the person who is going to be more part of AK Media, and it'll be fun to introduce her to all of you guys. We'll have updates on the meetups, and we'll have Technical Tuesday today. We'll keep going from there. Again, sorry I missed yesterday. I missed it just as much as, or I hated it just as much as you guys hated it. And we could definitely not do 2 days in a row because then I'd be going crazy as well. But I'm excited we came back today, and we're going to keep it going. And yeah, I really, really do appreciate everyone who reached out just to know if I was alive or not. Yeah, it meant a lot. And again, sometimes you just gotta know when to not, put out your product if your product is just not that good. And yesterday it was just, forget the sniffling, it was just sneezing and coughing. It was just like, it would have been unlistenable. So happy that we're back, and I think we'll get better over the coming days. And again, the reason we did the rapper stream is because that was scheduled for a month, so I really didn't want to cancel that. I just slept the whole day, and then we got through that stream, which I think was fun for those that were there. I think people enjoyed it. It was 2 hours. He was a natural. I mean, like the fact that he was able to talk for 2 hours, and there was never a moment where like I asked a question and it got awkward because he didn't have an answer or there was no one had anything to say. Like it was a very natural flowing conversation. Like he's really good at just being able to talk, especially about business, markets, like stuff that's not necessarily his niche, because his niche is more music. So I thought it was a great time, and hopefully we'll have more different collaborations. I know it surprised. I think there's like 4 people that knew this was happening. Most people did not know that we were doing the stream. But I think we'll have even more fun collaborations going into 2026. All right. Thank you. Oh, Dan Niles is his godfather, which is crazy. Like that's actual, like that. When he told me that, I was like, dude, that's so wild. Small world, but yeah, Dan Niles is his godfather. All right, that's it. Thank you, everybody. Appreciate it. Have a great day. I'll see you guys back on the close. We'll be with Jason for Technical Tuesday. And then tomorrow's the big one. Tomorrow is the big one, FOMC. We got to see if we can make it happen. Wow, ETH, she is really making a move for it. I know a lot of us, including myself, felt it was fake as soon as we saw the initial move. It doesn't feel that fake anymore. You'd need about 200 points going to the downside for it to be fake, which could happen because it's crypto. Even Bitcoin, 300 points away from 94. Yeah, maybe it's the Fusaka upgrade, but in general, you're seeing a lot of these risk-on assets make a move. So hopefully it continues. If it does, BMNR gets the hold on, and a lot of these crypto derivative plays gets the hold down as well. All right. Thank you, everybody, for being here. I will see you guys on the market close. Bye, everybody. Have a good one.